All right, can you see the charts and hear me talk? I want to say good morning, everybody, and welcome aboard. You say power cycling fixes things. Are we good? You can hear me good. Thanks, Louis. Can you see the charts? Can you see the charts? You can, okay. And so, can anyone else confirm? Can you both hear me speak, watch me in video, and see the charts? Hey, thanks, Joe. Appreciate it. So, when in doubt, break the power. Power cycle to fix memory issues. Anyway, good to see all of us. Go ahead and get started. There we go. We're recording. All right. Well, good afternoon, active traders, or good morning, as the case may be. I'm Ken Calhoun, coming at you live from California. I'm going to see what's in play for us today. You might want to go long SOXs right now. Bang. You might want to go long UVIX right now. Double bang. SOXs, that's a buy. UVIX is a triple buy. And most capital ever allocated to this instrument right here. UVIX skyrocketed up. I started telling my traders to buy this at 32 way back when. And it doubled and tripled and then some. Well, good to see you guys here. And I'm going to Babylon for about half an hour. I'm going to give you some strategies for day and swing trading. So it's good to see a big turnout. So our lineup today is really good lineup. Intro volatility. Me just to get the party started like a warm-up guy for the main act. Larry McMillan's going to be speaking at 12. I want to hear what Larry has to say about the VIX. He's so smart. He's a genius. Options. Martha Stokes to Steve Primo. Harry Boxer, he's great. Mark Leibovich, Price, and Norm. So all good top-level people. I want to say thank you for taking time out of your busy schedule to be with us here today. My company's done millions in sales. I traded over 120 million worth of stocks in a single year. Lots of experience to share. Let's get underway. My number one pick, my number one call has been UVIX for the foreseeable future. It's going to get over 200 a share. We get up to 600 a share within 7 weeks is my call. I'm seldom wrong. I'm the guy who nailed, you guys can see that, proof of when I bought TVIX at 52 and sold at 950 a share a couple of years ago. I'm a baller when it comes to these things. Like, sell them now and get back in if it gets up here. Get in, you hit and run, it goes up. First time in trouble, get out, ski out, and get back in up to the new highs. The reason you guys lose money is because you're following morons out there that don't know how to trade. Harry Boxer's good. Other people I work with, they're good. Harry Boxer's like my favorite, and his style is very close to mine. And I would say he's even a better, I think he's better at shotgun than I am. I'm like a close second. We're the two top. Harry's great. A lot of good people to work with. And one of the things that I want you to get out of the session is at least one good idea per speaker, right? I don't know about you, but whenever I go to one of these shindigs, it seems like an insane pitch fest. That's not what this is. This is a good quality presentation. So take a look at some of the charts for intraday. Our live members, we're nailing these guys. ENSC, UPXI, Toxel, boom. BRT, boom. UX, bang. And Toxel, pshing. Now, one of the strategies that I like to use for both intraday and swing trading is always go long right above a whole number. So, for example, we go long at 23.20 or 10 up here, right? Exit target would be the high part of that number. And it gives very easy to follow parameters for your entries and exits. I used to do so many seminars live at the MGM Grand in Vegas and in, where else? California here, at the Sheraton Anaheim near Disneyland. You want to go on a wild ride, but you want it to be a profitable, good long ride. So to do that, simplify. Two things you guys screw up on. And speaking of the trading in general, people out there, retail traders, don't use squiggly lines. I don't use MACD or stochastics and that. I'm a former corporate statistician for the Ford Motor Company. Used to graduate and traded full-time. That's 26 years now. I'm a baller when it comes to price action. And you don't need derivative. Squiggly lines are just derived from the data set. If you're smart and you know how to trade, you know what the data set means. You don't need the squiggly lines to give you permission to buy a stock. That's the dumbest thing I ever saw. Price action is all that counts in risk management. That's how you make millions. Huh. Wait. We move into Vegas or Hawaii soon, so I should put as much money in my pocket as I can. UVIX is going to be a ticket there. Boom. Now, let's go to daily. Switch over to some intraday or some swing trading. Hey, This is Turbo Charts 2000. And it's thanks to Harry Boxer for turning around on this. I have been using e-signal, but this is, I like it better. And it's a lot cheaper and it works really good. Bring me to another point. Bargain hunting is usually a stupid thing. I mean, I spent years trying to figure out bottoms. I have now. The main thing is stay away from them. You have a very narrow criteria in which bottom fishing works. The main thing is that to be a steep drop that's at least the AUTR, average true range of that instrument, and then you buy the bounce, especially if it's right over a whole number. You'll stop right on it. Better just trade breakouts and then fade out, scale out at the first sign of trouble or a drop in price. Let's take a look at some charts. Why don't you guys give me some tickers? Hit me up. What are some favorite tickers you want me to pull up? Right now would be a good time to say, hey, again, what do you think about Costco? Or whatever. We've got about 20 minutes left to talk. Hey, thanks, GS. Goldman Sachs. I almost went to work for them. I was told by Vice President of Electronics Division at Ford Motor Company, Eugene, he's a great guy. He said, Kellen, your problem is you don't play well with others. Because I was like the only guy in this whole department that got inroads, that got invited to engineering production meetings. I know what the heck, what to do to help them improve. And my coworkers were like morons. So I told them that it's hard to fly like an eagle when you're surrounded by turkeys. So I went for my own. Last time I worked for another person was 1991. I've been independent, financially independent ever since. I don't like people. I like animals like cats and dogs, but I don't really care for people. Those are like people like smart, like you guys and the industry leaders that I'm working with. Gold looks great over 552 with a hard stop at 448, exit target 584. Write that shit down and you'll be amazed. I'm just so good at this. 552 should buy, 548 your hard stop, 584 would be an exit target. I'm shooting star type pattern, a short under 527, cover stop at 531, exit target right over 490 would be the short play. And whenever I see a chart, I always ask myself, show me the money, right? If I was doing this at one of the money show events, I would say, show me the money. Can you guys see me now? Be a video of me somewhere. Hey, Larry, thanks. No, right under the 90, 580, 584, something like that. You want to trade right over this. This is actually a short setup here. So fade it down here and then play it long later. It loses the 530, you hit short, and exit target would be around the 490 right here. One thing you want to learn is price elasticity. I mean, I've made so much money with these things. It's just amazing. Give me some tickers, guys. What do you have? Oh, the Q's, Goldman. Okay. One of the problems with an instrument like this, the range is okay, but the problem is you want things that have large leverage. Now, you don't want to trade penny stocks and under $2, $3 crap stocks like these bozos in chat rooms on Discord do, nor do you want to trade overly expensive instruments because the range, the percentage is not good enough. What you want is a sweet spot. I like instruments that are in the $10 to $30 share range with at least a 4 or 5 point weekly range and at least a 1.5 per day. You want things that have good risk reward. And for example, when you trade, UVIX, like we did, I nailed the color. I had them sell right there in live room. You always look for a mountain, right? It's always gonna go down. It's gonna bounce. By the way, that's one of my favorite candlestick patterns. I know it's kind of hard to see. A small candle followed by a large homo body real candle. That's how it's good. Small followed by large, small followed by large. Just a straight momentum plan. Once it goes up, I don't know. Hmm. I'm find for you the an old PowerPoint slide I made of how I nailed VIX. Hmm. Can find it for you. Hmm. Sure. Well, I'll find it soon. Anyway, I wanted to show you proof that of my trading prowess. Hard to look at here. I've been so busy. I mean, we're doing AI on the site extensively. Anybody using chat, DDP, whatever? Chat, GDP? Hmm. Okay. The favorite setup. Yeah, Harry asked me that too. Favorite setup is go long slightly above yesterday's high. If yesterday was that's going long slight above prior day's high by maybe a quarter point or so. Hard stop maybe a quarter point under and go in. My main strategy that's it's been very popular because it works a lot is to go long on breakouts that are minor gap continuations. Number one play. By minor, I mean if it's a $20 stock, gap's no more than a point. Like it was, it closed yesterday at 20. It gapped up to say 20.7 this morning. We go long there and again over the 21. So minor gap continuation to the upside is the number one play.
Yes.
And for breakouts, you need to have, if you're going to do a breakout from inside previous day's range and up, you want to see a wide, big ass green candle. That's what I call it, BAGC, big ass green candle at the right side of the cup. Some other educator ripped that off and gave it a name, but I developed that. Small followed by large, and you're out. Trade within whole numbers. If you're trading more expensive instruments, like Tesla and whatnot, you trade within decade values. Whenever I trade Tesla. The problem that you guys have as traders is you don't trade enough. And you trade too much size when you do trade. And you use stupid moving average indicators to make your decisions for you. And on top of that, you don't make sequences of trades. And that was me like 25 years ago. Hey, the magic indicator says I should go long. And I buy 500 shares. You craps and go, shouldn't trade it. And I give up for the day. That's how not to trade. How to trade successfully and profitably. They've done many years. You look at every single trading decision, whether it's a swing or a day trade, as a sequence of trades. Minimum 2, maximum maybe 7 or 8. But go long, stop out. Long, make a little profit. Long, make a moderate profit. Long, stop out. Long, break even. Long, moderate profit. By the time I've done 7, I'm either in the money or not. And that's what you want to do. Do a handful of trades. Like brilliant Tom Sosnoff says, I'm a huge fan of Tom. He says, trade small, trade often. And that's a pro floor trader telling you. And I tell you something. I say trade wide, not deep. I used to say that on my money show interviews. Trade wide, not deep. Point of diminishing returns. I find that I don't do as well if I'm trading more than 7 or 8 instruments. The reason the phone numbers are 7 digits long is because that's our human information processing maximum capacity. If you go more than 7 of something, you tend to forget. So 7 stocks, 5 to 7 stocks is good. 15 or 20, too much. Now, this is a good breakout here. Where would we go long? I'd hit it long at 11.4, hard stop at 11.3, exit target 11.9. Watch this. The best shot caller out there. Well, here I say here, I'm second by something. You don't learn from me, learn from Harry Boxer for momentum trades. We're the only 2 guys worth learning from. A lot of peanut gallery marketers out there, bullshitters. Harry's good, I'm good. Learn from good quality people like I have here at the event, it's exciting. So that was my favorite setup. Anyway, watch it, right? UPXI. I don't even know what UPXI is. Trade thousands of instruments, I have no idea what they are. So it sounds like some kind of derivative ETN or something. Anyway, bang. Momentum candles. The most important thing you need to do is figure out your downside and manually trail stops. Other thing, always never use automatic trailing stops unless you're going on vacation. But manually trail your stops 100% of the time. So for example, I go long, I'd put a hard stop for day trade right under, say 11.38. You go in 11.52 for another play. Right. Now, when the candles start to get small, that's not good. You want candles to get bigger. Expanding ranges are what you want. means more and more interest is going to that instrument. If I ran a brick and mortar university, I'd have you guys learn how to trade markets first and an individual instrument second. It's all in context of what's going on here. Boom, I use the SPY because you can use it pre-market to see directional. Okay. Now this is an ugly looking stock chart. The market's going to make the biggest crash, bigger than COVID, coming up. And I called that back a month ago. I've been telling my traders to go short because this market is going to make an epic fail. Epic fail. It's going to test the COVID lows. You say, BS? No. Watch. This market is about to do the biggest crash in your lifetime. That was a perfect time to go heavy in our inverse instruments like stocks is. So much money to be made if you know what the F you're doing. So I like it. It's unlimited wealth or unlimited loss to it. Unlimited wealth. I mean, I go along stocks and UX. Boom! Flawless victory. Calling this punk long all day. Go heavy in this. UVIX. Now you could trade the VXX or one of the other instruments, but this has the best leverage. Flawless. Another good tip on how to trade. You're looking for a breakout. You don't trade the first sign of breakout of resistance. So morons do and they lose. Guys like me, we're the shark. We're sitting on the other side. We're a big ass block of shares that is other guys at the whole number. Don't do that. Don't go out like that. Wait for it to break out, a little false breakout. I've written over 100 articles for Stocks and Commodities magazine. I was rated #1 author in the whole world for 2 years. So thanks you guys for voting for me. I know what I'm talking about. When to go up, cut pattern, don't buy the breakout, goes down, buy the second breakout, okay? This pump may go down, right? Right? 50 cents in all numbers. The one to buy would be, say, the 52.6 on the breakout. So you set out the first shake breakout, go along the second one. I'll show you something here. 2 minutes, I've only got a few minutes left, right? About 10 minutes before. Larry's out. Larry's so great. So these people are so wonderful. They're really good people to learn from. You have my word. They wouldn't be here if they weren't. There's so many bullshitters out there in the industry. There's a few golden nuggets. That's who I choose to work with. They're the good people. So it's a. I said I'd rather do it right than. You know, the way I'm. Oh, actually, okay. Thanks. And bringing back my free Saturday week ahead, trading week ahead. If I did this for over 20 years and took last year off, had a health issue, but I kicked its butt. Well, you want to know the secret to beating? I got Parkinson's is have fun with a lot of women, and the dopamine levels go up, and keep your dopamine levels up by doing fun things, especially if you're good at it, like trading. So, okay, this pullback is expected. Now, what did I say? 52.7 would be the long term, right? I'm going to feel good at this. I told you that it would pull back after the first candle. It does. Pull back, and then that little cup that makes it, that's the trigger. Yeah. Where is? Remember, whenever you trade an instrument, you should never ever think it's going to be just one trade. You should always plan on 2 or 3 or more trades. So instead of say one 500 share trade, maybe make a little 100 share trade a lot. I do that a lot. It's test the waters. I think Norm Hallett, a brilliant guy, said floor traders call those feeler trades. That's very good. You feel you take a stop, you're going to be on a little 100 share trade. Now, if it breaks 52.7, that's your entry, okay? Fake outs, don't do it. Breakouts, do it. All right? Where is? Another tip, never buy something that's inside the previous day's trading range. Always trade out charts and out days. Because I want to make money, right? You don't want to do it into the street. Now, see, this is called a downtrend. I'm going to short that, right? I told my traders to do, I even told them to do a false breakout early when it was down here, that we're going to get a false breakout and then the market's going to sell off the rest of the day. Nailed it. That's what it is. Learn how to trade markets first. That's really important. Otherwise, you're going to F up and lose a lot of money. To make a lot of money, it's going to be so easy once you learn the patterns. Patterns repeat, which is great. Just like with people, patterns repeat. You can learn to read it. I'm a champion poker player. I won my first tournament 9 years ago in Vegas, and there's a lot of similarities. 2 plus 2 is a big poker form. Anyway, for example, stocks. I love this chart. It's one of my favorite things to trade. What a time to win. 8 minutes up. Long over. Now see my setup. Buy the second entry. Don't buy right under whole number. Thou shalt not buy anything with a 9 in it. That's what morons do. Pros, we like to trade the low end of the scale and sell into you guys at the 9. So I'm gonna hit 23.10. I'll sell 23.8, 23.9. Hard stop at 20 cents and then trail it from there. This is getting set. So I put a buy stop 23.2, 500 shares, and watch it go. On command, I can pull apart charts and make winning trade calls and winning trades. That's the skill you want. Bang. What else we got? Too legit. Wait. I'm telling you, I have a lot of doctors that talk to me, and they always ask my advice. And well, I'm not a registered investment advisor, but sell all your stocks. And I told that like a month or two ago, especially it's one that I saw in Bellagio. And if you're out there, hey, they're all like saying good things. So I registered the domain stocksfordocs.com and run something for them. Anyway, boom. Search around. I know I'm kind of all over the place. I'm kind of OCD. It's occupational requirement to be a day trader and be all over the place. But make it successful. So it hurts. Like Sosnov, one of those guys said, law of large numbers. Great video. So impressed with Sosnov, all these people. I got a few minutes before I turn over to our keynote speaker, and we will. Now, if you want to play a bounce, the cues. Anybody know old school funk song, More Bounce Dance by Zappa right there? More bounce dance. This is a hammer. Hammer time. Too legit to quit. Okay. Along right over here. Boom. Yes, I'm remarkably good at this. I should have for 25 freaking years. Long over near somewhere. 4, 5, 6, 3 would be the trigger. Go long at 4, 5, 6, 30. Right up at 4, 5, 5. Exit target would be right under here. We'd say 457, 458. See that risk reward is no good. When we bet 500, 450 a share, see, I nailed the call, right? Boom. It's just too good. Amazing. He got it again. 100% of my calls. Nail them. But the range is not as crap, right? Upside on the trade might be 2 or 3 sticks. Wall Street traders, we call it sticks. Now you want to go Johnny Holmes something? It means large size. You want to go Johnny Holmes? You want to trade breakouts, not bounces. Risk reward, the risk reward is no good. At least 2 or 3 to 1. Okay. So I'd be looking for long if the range were better. So instead, trade something like Sox L. Over high, say we're see big ass swing count over the 1040. So anyway, lots of money to be made. You know what kind of charts to produce the kind of income, and main thing is trade outside. The best setup is always, and by the way, Mondays and Fridays are generally the worst performing days for me because often you got guys are taking their vacation, the Hampton, whatnot, 3-day weekends. So those are shoulder days, I call them. Tuesday, Wednesday, Thursday, 9:30 to 10:15, and it's prime time. Best place and time to trade. You only want to trade charts that are making small gap continuations above the previous day's high, and you want to go in right above a whole number and sell into like the 0.9 of the next number. Then you rebuy the next whole number. So you're dodging the bullet of whole number sells and then on the whole number of breakouts and make it all work. Ken Calhoun, daytradinguniversity.com. I'm not going to offer anything for sale. I mean, I don't need to. Look me up if you want. I'm going to be doing these Saturday week aheads. I've done them for 20 odd years. I'm going to resume doing those. I'm really thrilled to have an all-star lineup in our midst today for our trades, for our event. We've got outstanding people and looking forward to hearing what they have to say. So I'll put the agenda up here. Boom. So that was me, and we've got a long-time friend and my colleague Larry McMillan, Top Man Options, and then Martha Stokes, Steve Freeman, Harry's coming out, and Mark Lewitz, Price, and Norm. So good people. And That I will turn over to you. We have to use the dang headphones. Oh, there we go. Larry, let me, if I can do this. I made all the speakers co-hosts. You guys can take control if you want. So Larry, are you there?
Yeah, I'm here, Ken. How are you?
Hey, doing great. Oh, it's been such a week. It's so much fun with these things. See, let me turn this over to you. The chat. You see, I think you have co-host control, so you should be able to just take it over. Over to chat. Participants.
So do you have to share? Do I have to click share or do you click share?
Okay. Make you co-host. And I'll stop sharing. So now you should be able to take over with the share. Supposedly, let's see.
Let's see. Well, I'll get the right one here.
How you been, man?
I'm good. How are you?
Doing good. It's so good working with you. But it's such a good person to work with for all these years, right? It's been at least 10 or 15, at least 15 years, I think. Wow.
Right. So you see that all right?
Yeah, let's see.
Okay.
Let me see. What I'm looking for. Maybe ask that. Hey guys, can you tell Larry if you can see his charts and all that? Okay. I figure mine out.
All right. We're ready to go?
I think so. Yeah, wait. Yeah, so current state of market predicting indicators. Yeah, you're good to go. But yeah, just a quick intro. Yeah, well, never mind. You're the top options guy in the world, so they know. Okay, take over and good power. Thanks.
All right. So we're going to spend a half an hour here looking at our indicators on the market. It's a pretty wild market, one of the wildest I've really seen in quite a while. We will be emailing you the PDFs of this webinar, but if you are interested in our special, you can go to this website. I'll talk more about that later. Anyway, so when I'm looking at the market, the first thing I look at is the chart of the S&P 500. I mean, that's the most important thing to me. Your indicators are important, but if they're fighting the trend of the S&P, then the trend is going to win out. But we'll also look at equity-only put-call ratios. We'll look at market breadth, where we have a option-oriented take on that. We'll look at VIX and the volatility derivatives, which are very, very important in this market. So we have a couple of rules, important rules. First, oversold does not mean buy. We've certainly been oversold here now for probably since April 4th, maybe even April 3rd. But it's there's been some very nasty days in there. So oversold markets can't continue to decline. We wait for confirmed buy signals. The corollary to that is overbought does not mean sell. We don't really have anything that's overbought right now. So here's a longer term chart, 2-year chart on the S&P. And you can see that the trend line actually connecting the early 2023 lows and then the October lows off that correction pretty much is right where we bottomed out last week. I think that's probably more coincidence than anything, but it is there. But right now, what's important is that we actually have a series of higher highs and lower highs and lower lows going on, and that's not good. So to me, once you get two lower highs and two lower lows, you're basically in a bear market. I don't really use the 20% rule or whatever the media uses, but to me, until that pattern is broken, you're in the bear market. So right now, you can see that trend line has come down to about 54.50, which is really right where we rallied to this morning. 54.69 this morning. You can also see these highs that we had in here last week. That's resistance in that area. And so, we've had a nice oversold rally, bounce all the way back to here. If we take a little bit closer look, say a 1-year chart, you can see the 20-day moving average is right here. So typically, Oversold rallies will rally back and hit the 20-day, maybe even exceed it by a little bit. So I wouldn't be, so this morning we got up to here, but you can see all these recent highs are offering resistance right in there. And if we were to overcome that and even break through this trend line a little bit, I wouldn't be too surprised because that's a pretty steep trend line. So, you could have something like this and then, a more modest slope to the downtrend line, something like that. 200-day moving average is up here and that's now heading downwards. That's not a good sign either. But I put this broad pink line here at 5,800. If for some reason we were able to climb above 5,800, then I would turn bullish. But lacking that, this chart to me is bearish and just in varying degrees. But it's got its problems, and it's certainly not the pattern of lower highs to me is significant. So I just sort of repeats what I was just saying there, in case you you don't have to take notes. You can just, when we email you the PDF, you can just print that page if you want. So another thing we do with the S&P chart is we draw modified Bollinger Bands on it. When John Bollinger invented Bollinger Bands, he defined realized volatility as the standard deviation of daily closing prices. It sounds reasonable, but that's not what Black-Scholes and other mathematical models use. They use the standard deviation of daily percentage price change. It's a little bit different. But anyway, here's that chart. And what we do here is we look at the this top line here is +4 standard deviations, and the one right inside it is +3 standard deviations. So if we come outside and then go back inside, that's a sell signal, and then we hope we expect it to, but I guess hope's a good word, to reach the -4 sigma, and that covers that trade, and then we go long. So that was a long-term buy signal. You can see we actually never, in all this time, never reached the +4 standard deviation band. Now we've fallen back out. We had a false buy signal there, and now we came all the way down here, well below the -4 standard deviation band, and then this green bar, I made it green, is the day we rose back above the 3 standard deviation band. However, that is not the buy signal. The buy signal occurs here at this level, 55.75. We have had too many whipsaws just trading off that green bar, so we require further confirmation. In this particular case, the further confirmation would be a close above 55.75. So a close above 55.75 would give us a buy signal here. Obviously, that hasn't happened. It may not happen. I mean, we might go down and, have to set up a buy signal at some other totally different level. But for now, what we call the McMillan volatility band buy signal has not yet occurred. So again, just repeating that previous signal was in place for a few days, and we have a stop out on that. So we're not getting completely destroyed by these are kind of intermediate term signals. We have a subscription service where we do the same band analysis on every stock, every index, every futures contract. If you're interested, it runs off of TradingView, and the TradingView is free. This service costs it's a modest amount. Anyway, let's move on to put-call ratios. So put-call ratios were invented as a contrary indicator by Marty Zweig back in the 1950s. We use the equity-only put-call ratio, which is all stock options that trade, to predict the broad market. So Marty's theory was that if you see a lot of put buying, he was getting the data in those days from the ads that ran in Barron's from the put and call dealers. And when he noticed was there's too much put buying, pretty soon the market went up. If there's too much call buying, pretty soon the market went down. So defining that, of course, is harder. But typically the standard ratio just uses the volume of puts traded by the volume of calls traded, divide the two for every stock every day, and keep a moving average, say 21 days, and you can track the put call ratio. Now we post about 1,600 put call ratio charts on our website in an area called the strategy zone every day. And we put the stock price and the put call ratio chart on there together. They move in opposite directions. So in this case, let's say the stock is declining. People are buying puts. That forces the put call ratio up. Eventually, you form a local maximum in the put call ratio, and that's a buy signal for the stock. And on the other hand, so now the stock is going up. Move over here to the left side, stock's still going up, and people are buying calls. That forces the ratio down. Eventually, you get to a local minimum on the put call ratio, and that's a sell signal for the stock. So we like to see this symmetry. If you don't see the symmetry, perhaps something else is going on, some sort of arbitrage or something. Anyway, this is the current standard ratio through yesterday. You can see that we had the last proven signal that we had was the one here in mid-February, a local minimum. That was a sell signal. We're still on that sell signal. Now, I put a question mark here because you can see that it's rolled over a little bit. We have a computer analysis program that looks at this. It knows what's coming off the 21-day moving average. It kind of knows that big numbers have been coming on the moving average. So it is still not saying that's a buy signal, but I put a question mark there because if that buy signal lasts for 10 days, then 10 days in this market is forever, but 10 days would confirm it. But normally the computer analysis programs will pick it up much quicker than that. So this one is not yet confirmed to a buy signal. The other put call ratio that we calculate is the weighted put call ratio. We use the option price on that one. So we take the option price times the volume for each option, take that dollar sum of all the puts, and separately the dollar sum of all the calls on any stock, divide those two, and that's the weighted put call ratio. And now we're looking at the dollars being spent on bullish opinion versus the dollars being spent on bearish opinion. So the signals kind of come in the same spots, but they're usually more extreme. So again, here you can see that the sell signal came in mid-February. Now we've climbed. This one has climbed way higher than it was last year, and it's really it rolled over and formed a little peak that's lasted for 10 days. So that technically is a buy signal, and the computer analysis programs actually do agree with that. But you can see that it started moving back up here again. So I'm not going to really act on this as a buy signal until both of those charts agree. But in any case, they're very high. If you want a little high on their chart means the market is oversold. So they're in oversold territory. If you want a little historical perspective, here's how the standard ratio compares where it is today and with where it has been in the past. It's not that extreme. You can see that in the bear market of 2022 here, it got much higher. In the pandemic, it got even higher than that. And right after the pandemic, it got really low. This was extreme optimism in the market, but that lasted for quite a while. So, you know, recently what we had, that sell signal that came in January and February, that was what I've labeled it optimism, but not extreme optimism. The weighted ratio, kind of a similar thing. This is the current weighted ratio over here on the right is still at about this level. You can see in the bear market level, 2022 was much higher. Financial crisis was about that same level back here. And while we don't use the absolute level as anything particular, obviously if it's very high and then forms a peak, that's a very strong buy signal here. This is high compared to where it's been the last few months, but maybe even the last year. But really, that 2022 bear market, by the time it reached its end, pessimism was a lot more rampant than it is right now. Anyways, so what do we buy when we buy these? So we trade SPY options. We trade them slightly in the money so that they have a decently high delta of, say, 70 or so. And that means that if the SPY, if I'm long calls, let's say SPY goes up $1, the option goes up 70 cents. And so I don't trade the deep out of the monies because I could be right on the stock SPY, let's say, the signal, and be wrong on the option. I don't like that. So on TV, of course, they spread everything. And this market, options are very expensive. So it does make some sense to spread options in this market. But in general, you don't really want to be doing a spread every time. By spread, I mean you buy a call at this level if you're bullish on the stock, and then you sell a call at a higher strike. The problem with doing that is you cut your profit potential off right here, as opposed to owning a call. You don't do that. So you can, people say, well, your risk is less. Well, your risk is 100%, whether you buy the call or you buy the bull spread, because your broker requires you to pay for them both in full, and you could lose everything you put up. So the risk is really percentage-wise the same. One has a lot higher profit potential than the other. But when options are expensive, as they are now, then it does make some sense. So, but we want to, you don't want to just cut your profit potential off and then just walk away from it. So there are ways to mitigate the negative aspects of spreading. One of them is to widen the distance between the two strikes. So right now, if we're doing a call spread, my strikes are 20 to 25 points wide on SPY. But a put spread, because the out of the money puts are even more expensive than the out of the money calls, I would do those 40 to 50 points wide. And then the second thing you can do to mitigate the negative aspects, again, of owning the spread is to roll if you get to the short strike. So let's say an example. This morning, SPY was about 540. It's 536 right now. So what this is good. Say it's 540 and you're bullish. So you want to buy a May 540 call, and you're going to widen that 25 points out and sell a May 565 call. Fine. So that's your spread. You're fortunate enough to have SPY then rally up to 565. But at that point, if we again do this profit graph thing, SPY is now here at 565, and your profit on your trade is about right here. Yes, you could make a little more, but you're pretty much done. And you're cutting off your profit at that point. So what you do is you sell the spread that you owned, the first one you bought, the 540, 565 spread, take your profit on that and buy a new spread, move everything up 25 points, and now you have another opening to go higher and make some more profits on the upside. Not only that, you took out some money. It always feels good. And if the market backs off from there, at least you'll have rolled some of it for a credit. Put spreads work the same way, although ironically, in this market with interest rates where they are, put spreads are actually cheaper than call spreads. That's just the way option pricing is. But anyway, let's say, again, with SPY at 540, you want to do a 50-point wide spread, you'd buy the 540 put, sell the 490 put, paying 12 for 50 max. That's pretty good. And now if it trades down to 490, if it trades down to your lower strike, you do the same thing. You sell the spread you owned and you buy a new one, roll everything down 50 points. So those are the two ways you can mitigate the negative aspects of the spread and still participate. With VIX near 30, I think you have to spread these SPY options. They're just too expensive and too much time value as it is right now to not spread them. And eventually VIX will start to come down, and that's makes it difficult for call buyers in SPY too, because yes, SPY is going up as VIX is coming down, but your time value is coming out of your options. That's a different problem. Let's take a look at a couple of individual put call ratio charts. This one is Johnson Controls. And these, when we're looking at individual charts, I look for just the local maximum extremes. So here, this is a recent buy signal. You can see this buy signal back here. That's a pretty good one. And then this one back here from roughly the same level. That was a pretty good one too. So we're looking here, but what I've drawn on the chart is a downtrend line that exists here. And I don't really want to buy into this until it can break that downtrend line. So when we made this recommendation, it's still open right now. We want to see the stock close above here so that it, before we actually participate. Microsoft, similar situation. We had a lot of pessimism here recently at Microsoft. The put call ratio went up to 130, which means $130 are being spent on puts for every $100 being spent on calls. And again, you could say, well, I'm going to risk it here. That's fine if you want to do that. But we're looking for it to break. If it can't break out over that trend line, then I don't want to own it. And then you can do the same thing with futures, just because. So this chart here is drawn with the T-note futures that trade on the Chicago Board of Trade. That gives us the put-call ratio chart. But you don't have to trade T-note options on the Board of Trade. You can trade an ETF. In fact, the symbol is IEF. That simulates the 10-year note futures. So you could buy options on that, or in this case, puts, because there was a sell signal. Anyway, let's move on. Market breadth. So it's a couple of things you can do with breadth. First, look at advances minus declines. That's pretty simple. Secondly, keep it total. And then secondly, you can do an oscillator. So it always, in breadth, you can look at New York Stock Exchange data, but there are things on the New York Stock Exchange that are not stocks. So we also look at what we call the stocks only breadth, and this is all stocks that have listed options. So there are over 6,000 of those currently. So here's the oscillator going back a few years, and you can see that from the left-hand side of the chart, from 2018 through like 2022, we didn't really get oversold too much. We did have that one very bad right before Christmas of 2018, and then of course this is the pandemic. We got very oversold, but then we hit a bear market, and we had a lot of oversold for a year or so there. And then we went back to not being too oversold too much, but now just recently we went all the way back down to nearly the historic lows. So remember, I said oversold does not mean buy. So we don't buy until it stops being oversold, and that's just about to happen. Depends what happens today, but we moved up we're right up in here right now. And if the stocks only breadth is positive today, we would get a buy signal from this indicator. And it's a short-term indicator. It does have whipsaw tendencies. But if we get positive breadth today, and certainly with the big strong opening we had this morning, even though it's fading a little bit now, it's probably going to happen. So we probably are going to get a buy signal from this indicator today. Well, another thing we look at is new highs versus new lows. This table shows them on the New York Stock Exchange, as well as the stocks only, and then as well as NASDAQ. But we use the New York Stock Exchange one for our signals. So right back here at the end of March, we got a sell signal. Advances were greater than, declines were greater than advances for 2 days in a row, and numbered more than 100 on each of those days. So that was that sell signal right here from the New York Stock Exchange indicator. So today, though, yesterday, there were more advances than declines. And if that happens again today, that would stop this signal out. So right now, I'm just looking at it. There's only been 3 new lows today. So there's going to be more new highs than that. So this indicator, probably this sell signal, will probably be stopped out today. So it was a decent sell signal from, the end of March to now, and it's going to be stopped out. That doesn't mean it's going to a buy signal. It's just going to a neutral status. Finally, let's talk about VIX, because this is really pretty interesting in a market like this. A couple of things that we look at the VIX chart for. One is the trend of VIX. It usually trends the opposite direction of the market. And number 2, spike peaks on VIX, on the VIX chart, are buy signals for stocks. People overreact, they panic, they buy puts paying too much, volatility spikes up and then back down. So here's the current chart. You can see the spikes on there over the last year. There was that crazy one last August. So the red, we have a trading system with rules that we built around this, and the red letters are successful trades. The blue letters were stopped out for minor losses. But this currently is still on a buy signal. The buy signal is in green, indicating it's still open. And that buy signal came after we traded up to 60 and then backed off from there. So that's still in effect. That will be in effect for 22 trading days. On the other hand, remember I said the other thing we look at is the trend of VIX. So in the purple circle down here, that was the day right there where both VIX and its 20-day moving average rose above the 200-day moving average. And that was a sell signal for stocks in late February, and pretty well timed one. And it's still in effect because, again, both VIX and its 20-day moving average, which is right here, are above the 200-day, which is right here. Obviously, that's not going to collapse too soon. But again, we had spreads, we've rolled them as I described earlier. So we've locked in profits there. We'll see what's going on. But right now, the trend of VIX is still technically going up, and that's not good for stocks. We do have that other short-term buy signal. So it's, not ideal that they have two competing signals like that, but it does happen from time to time. So I just, again, pretty much repeating what I was saying. So let's get to the interesting stuff. So you can't trade VIX. You can trade, SPY options based on the VIX chart. But you can trade VIX futures and options. So in a normal bullish market, if we look at the futures and we plot them out over time, the term structure slopes upwards like this, and that's a bullish market. On the other hand, occasionally this happens. The term structure of this future slopes downwards, and that's not a good sign. And doesn't happen very often, but it has happened now. And it's been this way for really since about April 4th or 3rd. And so here's the current prices this morning. I took them just this morning. So VIX was 27.79, and the May futures, which is the front month, were 25.10. So take 25.10, subtract out 27.79, and that's minus 269. So the futures are all trading at discounts to VIX, and you can see that each futures contract is lower than its predecessor. So that's a term structure that's sloping downwards. And this was this morning after we had the huge rally this morning, after we had the huge rally yesterday, after we had the huge rally Monday afternoon. And this is still negative. This is telling you that the volatility traders in the market are not expecting, they're expecting more lower prices. And so this is a negative for stocks. The CBOE, those are futures. This is a CBOE volatility indices. The CBOE it publishes a 1-day, a 9-day. VIX is 30-day, then a 3-month, 6-month, and 1 year. Forget the 1 day. That's just useful for trading those 0 data expiration options. But you can see then the rest of them also slopes downwards. Each one is at a lower price than its predecessor. Again, downward slope, bearish. So this agrees as well. Now, eventually, we'll get to the point where VIX will fall back below the 3-month VIX, and that would be a buy signal from the market. But right now, that's not the case. So right now typically we look at the 2 front month futures. May is trading at 25.10 on that chart versus June trading at 24.68. That's negative. I mean, it was a lot more negative last week, but it's still worrisome. And this is the largest persistent inversion we've had since March of 2020, since the pandemic. And until it goes away, it's still a negative hanging over the market. So there is a trade that we use sometimes. I don't want to get too involved with this, but basically, you can buy VIX calls, 3 points in the money. Let's say you buy 3 of those, and then you also buy 1 SPY call, 3 points in the money, and you do these when there's a large discount on VIX. So we just saw the discount was let me just back up here. The discount was $2.69. I would say that's not large. Large would be $5 or $6 discount. But anyway, we were using this strategy last week. It worked out very well in April, and we have set up a position in May. We do recommend these kind of trades in the Option Strategist newsletter. Then finally, one last chart, the frequency of 90% days. So like yesterday was a 90% up day, meaning advances were more than 9 times declines, or advancing volume was more than 9 times declining volume, or both. And any one of those counts as a 90% up day. So when we have a lot of 90% up days, people think, well, these 90%, days, that's good. The market's oversold. I want to buy it. But in reality, as the number of 90% days is increasing, that just means you're in an increasingly volatile market, and you don't really want to fight that increase. So this is the financial crisis. It didn't really peak out until there. I think that one might have been the flash crash, pandemic, bear market, and here we are right now. We've got 3. In the last 12 days, we've had 3 90% days. That's not good. It could just go away and never hear from it again. But as long as this is increasing, I would still, again, have some modicum of caution about the market. So where do we stand with all this? So what do we have that's bullish? Well, we got that VIX spike peak buy signal. That's been in effect for a few days, well, actually a week or so. And as I said, today we're going to get a breadth oscillator buy signal, but we don't really have any other buy signals. We're in a neutral status on the McMillan volatility bands. New highs, new lows are returning to neutral status. Now the equity only put call ratios are coming off, they're kind of moving to the left here, but we don't have a buy signal from there yet either.
And then Larry's
Meanwhile,
going to say we just have a couple minutes left, but yeah, great job so far. Thanks.
okay, well, to basically the bearish things are still the negative ones. The chart of S&P, the trend of VIX, and the thing we just looked at, the construct of volatility derivatives. So we're maintaining a core bearish position. I will trade these other buy signals around that, but as long as the S&P chart has these lower highs and lower lows, that's negative to me. So this is the offer we're making. Our top 3 newsletters, a month of each, for a total of $99. And you can sign up at that URL there at the bottom of the page. We will be emailing the PDFs to you. And, our track records are on the website of these newsletters. One thing we've been into quite a bit recently is buying straddles on some of these crazy stocks with earnings. That's in the Option Strategies newsletter as well. So visit our website. We have a couple of other newsletters. And if you're interested in our money management, this URL is down here at the bottom. We require a $100,000 minimum account size. All right, Ken, I'm going to shoot it back to you.
Well, thanks, Larry. Brilliant presentation as always. I always like hearing from you on the VIX, and performance is great. And you're one of the best people in the world. So thanks for being here. Appreciate it.
Okay, thanks for having me.
Yeah, and I highly recommend him. Really, he's the best. So he's great. Hey, up next is another superstar, Martha Stokes. Are you with us here, Martha, today?
Yes, I am. Can you hear me?
Yeah, sure thing.
Okay, I've got my video on. Can you see me?
Yeah.
Okay.
Let me, one quick thing is one of the things I do. 30 seconds, let me play a little bit of horn here and then I'll turn around. A little thing to wake everyone up. Okay. Well, thanks. Martha Stokes is here. Great to see you. Good.
It's good to see you. Thank you very much.
So
Right.
take it
You
away.
ready?
Yeah.
Okay. How swing traders can thrive in falling markets. We're in a falling market, as everyone knows. I'm an educator. I don't recommend stocks. I don't give advice on that type of thing. I simply educate. I retired very early in my late 30s, and then my partner decided that I should teach because I'm very good at what I do. So I am a CMT, that's a Chartered Market Technician. I've been a long-term member of the CMT Association, approved by SEC Series 86 for technical analysis and for education. I'm the CEO and co-founder of TechnoTrader with Howard Johnson. We've been doing this for 27 years. And I am the author of The Profound Cycle Evolution Theory, which advanced the knowledge of cycles, because I was identifying evolutionary cycle deviations, which are important when we see something like what we are encountering right now, what's going to happen next. The cycles are very important. I also presented the CMT Association with my new doctoral thesis, Relational Technical Analysis. So I have two fields that I am considered by the CMT to be expert in. So today we're going to talk about the buy side and the sell side real quickly. Bull market cycles last anywhere from 10 to 15 years, sometimes only 8 years, depending. We have the body of professionals control the market, and they control it very strongly. 80% of the market activity is professional side. These are all the professionals. I'm not going to go into this because we're going to talk about the sell side today. Only 20% of all the market activity is on the public exchanges nowadays. I often hear people say, well, I see these whales, 100,000 share lots, 50,000 share lots, 200,000 share lots. Those are small asset managers and small funds managers. These guys have 300 trillion assets under management worldwide. So that's the buy side. So the downside, which we are encountering at this time, is inverted in terms of where the dark pools are and everything. The dark pools are the buy side institutions. They're the fiduciary responsibility is to the wealth of the middle class of America. They control the 401ks, pension funds, mutual funds, ETFs, developments, derivatives, so on and so forth. We have wealthy private investors, mostly retired CEOs. They know what they're doing. They're going to pull out or pull back a little. They know so much about how the market works and how corporations work. They're on top of it. We have corporations who are doing buybacks, struggling to try to keep their companies moving upward, or at least not going into a big fallout, because the sell side is a free fall. Sell side institutions are short-term traders. They're the banks and the Goldman Sachs financial giants. Then there's a small minority of them now. They used to be the market makers of the floors, but those floors no longer exist. They still have professional floor traders on floors. And then you have your professional traders that are independent. I teach a lot of these individuals. And this number is growing because more and more of you want to become semi-professionals and work from home and make money. From home, professionals make millions of dollars a year. They don't make $2 or $200 a weekday. They make a lot more. So you should be trading with them. High frequency traders have been around for many years, 20 years. We'll talk about them. We have the sovereign funds, foreign funds, nonprofit funds. They have been slowly rotating out of the market. That's causing downside pressure. We have small funds groups that don't know what they're doing. A lot of these are just franchises, and they're salesmen trying to sell certain instruments and products to the new investors and new retail traders. So your retail traders, you start to panic and you start to sell in here, or you try to sell short. We're going to talk about selling short today. Small lot investors and odd lot investors get in last, which is the inversion, and buy side institutions are slowing this move down. They have what's called support the market. Support the market is where if the market dips below 20%, and then they move in with their vast amount of assets and push it back up to hold it. They did that in 2022, and they're starting to do it now because they do not want the long-term 401ks to run and move their money out of 401ks and pension plans or into other areas. They want to manage that huge wealth of the 77 million families that have money in the market. It's not a small amount. Most Americans have something in the market.
Martha, just a quick question. Do you have charts to share right now? We just seen your video.
Oh, yes, I do. Yes.
Okay. Good thing someone asked. Can you click where it says share, the green button, and then pick your...
Okay, I apologize.
No, it's fine.
Okay, where is the share?
I make mistakes with this routinely. We wouldn't be you, but we do there. There should be a green button with the black arrow, and then it says share somewhere. Yeah.
I have audio, video, participants, chats, more, and leave.
Well, it should be a green box with a black arrow pointing up that says share. Somewhere in there.
Oh, here we go. I find it.
Oh, cool. Okay.
I apologize for that, folks.
No, that's fine.
Sorry.
Well, thanks to whoever was asking, and we count on you guys, all the traders out there.
Can you see it now?
Yeah, looks great. Yeah, very good.
Okay.
A great presentation too, because you got a lot of the good professionals.
Okay, I'm just going to review very quietly. This is the bull cycle. 80% of the market is controlled by the professionals. These are all professionals. Retail side is the smaller funds, asset managers, you, small investors, odd lot investors, and so on. They only control 20%. That's on the public exchanges. We're not talking about that today. I have other webinars that I feature that in. Today, we're talking about the bear cycle or a correction. We're in a correction. It could turn into a bear. It is not yet a bear. It's opposite of what's going on. The buy-side institutions are the first ones to slowly rotate. They started rotating in November. It's lowering their inventories and putting a lot of cash aside because they anticipated this. Wealthy private investors or CEOs and corporations also are using tons of buybacks to try to support their stocks in this very volatile situation. So we have the sell-side institutions and professionals. They sell short. They place orders in the market early. High-frequency traders do it at open. They place a huge number of small lot orders before the market opens on the millisecond. All these guys trade on the millisecond. You trade on the minute scale. That's a big disadvantage. So you need to learn how to get in before the high frequency traders move it down or gap it down or gap it up. That's what I teach. We have a lot of sovereign funds. I've talked about that, retail traders and small lot investors. The buy-side institutions have support the market in place, ready to go, trigger if the market falls below the index's highest high of 20% or below. That keeps the wealth of the nation under control and safe because they will protect it. That's their job. So I want to teach you about market condition analysis. Who is in control of price matters. Of all of those different groups, which one is controlling price right now? And that's what I teach, how you can identify who's in control of price by looking at the charts. What technical patterns are prevalent and reliable? There's a lot of chart patterns, but not all of them are reliable. And which ones are the most common? Because the most common are going to give you the strongest charts and buy entry signals or sell entry signals or sell short signals. How price will behave at resistance and support. It varies based on market condition. There are 6 different primary market conditions, and then there are trading conditions under that on the day-to-day, intraday basis. What trading styles work best? Are you a swing trader, day trader? Some of the activity is not so conducive for certain kinds of trading. I teach platform position trading. That's for a steady, very slow uptrending market. Which indicators to use? You need to adjust your indicators and your period settings to the market condition because it varies, and you always want those indicators to confirm your entry signal, which should be a candlestick. The inherent risk of trading specific styles. We need to know what trading style is going to work ideally for that market condition. A style is swing trading, velocity trading, day trading, platform position trading, intermediate term trading, long-term investing, that type of thing. The styles tell you what strategies to use. Options is a style. It's not, you have many strategies you can use within options trading. What trend line patterns are common? Trend line patterns have changed dramatically. We no longer have peaks and valleys, and we very, very rarely get a head and shoulders pattern unless somebody really compresses and distorts the chart to make it look that way. So the trend line patterns are very important. Which entry and exit signals are most reliable? I'm teaching a lot of people right now how to follow the pro traders because they're using nudges, which are really tiny little candles that nudge the price and trigger HFT action. If you can see that, you can get in with the pros, and then you can ride those big gaps and runs down. The strength of price and volume patterns is important. Price and volume go hand in hand. If volume is declining or price goes up on weak volume, it's not going to sustain. So you need to really pay attention to price and volume patterns. Market condition analysis is how and when to trade, who is controlling price, what to expect in near-term price action, where to find excellent picks, how to enter, and when to exit. Market condition analysis is a roadmap of which market participants are actively trading, which are sidelined or waiting for the opportunity, and where we are in the overall long-term, intermediate term, and short-term trends. You can get whacked as a swing trader if you're not paying to the intermediate term support level or resistance level. This provides what I call relational analysis needed to navigate the more complex marketplace. I won't kid you, the marketplace is extremely complex and has changed dramatically. In the last 27 years, there is just tons of change. But as we change, we learn and we give more information. And that's why I've got my 2 theses, because they totally change everything. Let's talk about professional traders. They're a growing force in the market. More and more floor traders are leaving the banks and going on their own and trading from home. Professional floor traders, proprietary desk traders, independent professional traders. They're a big group. A professional trades differently from a retail trader. They are aware of the entire body of market participants, what each is doing, and how that market participant impacts price action. They're looking at all kinds of things that you miss entirely. They are aware of who they are trading with and who they are trading against. They want to be trading with the buy side. They want to be moving with that. Or if they're selling short, they want to be trading with the sell side because the buy side doesn't sell short. They're long-term investors. Professionals use special order types and commonly trade 1 to 5 million shares in a transaction. So if you don't see a million share lot going through on your level 2 or whatever screen level you're using, you are seeing small lots, not the professionals. They use special indicators designed to identify which side of the transaction the large lot triggered. Since I'm a professional, I share my indicators with my students, but I don't share them with the general public because they take time to learn. Independent professional traders hunt for dark pool buy zones or sell zones, and they track that. They create candlestick patterns called nudges, which is a new candlestick that's just been coming through in the last couple of years, which trigger HFT automated orders. So high frequency trading is a big part of the market. They are on the professional side, but they trade the public exchanges. High frequency trading systems firms are the fully automated algorithms that function without human intervention. A programmer writes a program, tests it, and it becomes an algorithm. HFT activity is mostly at market open. We had a big gap up this morning. Who did that? HFTs. Every gap up is controlled by HFTs. Every gap down is controlled by HFTs. Critical for you to know. All huge gaps downs at market open are caused by the HFTs. HFTs fill the queues with thousands of small lot orders milliseconds ahead of the market open. How many milliseconds are in a second? 60,000. They can submit 60,000 orders on the millisecond before the market opens. You're typing in your order 1 minute ahead of the open or whatever, and you can be swept away by that amount of activity. You have to understand what's going on here. The computers of the market then adjust the stock prices up or down based on the number of buyers versus sellers, and so you have this balance that's going on, that the automated system of the market, because we're fully automated, although floor traders and pro traders still enter their own orders and transactions. They let the AI do the routing for them. HFTs are market makers or takers of liquidity and earn rebates, which are commissions on the liquidity they provide using the small lot orders. When we went to decimals, the efficiency of the market became so efficient, the liquidity evaporated. And so the market needs the HFTs to provide liquidity. So we always can, if a buyer wants to sell, there's a buyer. If someone wants to sell, there's a buyer. If somebody wants to buy, there's a seller. It's very tough now because it's so tight. Sell-side institutions. The giant money center banks and the giant financial services are the sell-side institutions. They are no longer the powerhouse of the market. They are short-term traders only. They are not allowed to hold things for long-term, at best 3 months or so. Banks are short-term traders. The floor traders of the sell side are the most talented with extensive experience and trade all the financial markets. They go to the Ivy League colleges that have financial service degrees, and they pick the cream of the crop. They have the best of the best. 10 apply, 1 wins a junior seat. They have multiple orders that fill on the millisecond and front run the retail traders and investors. They can see what you're doing. Why? Because it is required by law that your retail brokers not trick you. So they must light their orders before they send them to the payment for order flow market makers that they send all their orders to now. They don't keep inventories or very little inventories because they can't afford it, because they're giving you your trading for free. They have to make money somehow. So the PFOF is what they do. All this stuff is important to understand, and I'm cramming this stuff like a fire hose down at you, so be patient and watch this again. The sell side and buy side have a hidden war that has been going on for many years now. In 2008, the mutual fund industry almost collapsed because the giant banks did stupid. They over-leveraged mortgage-backed securities and credit default swaps, and they couldn't pay the mutual funds the credit default swaps back. So the mutual funds, the banks got bailed out by the government, but the mutual funds did not. Bad idea. The buy side doesn't buy anything from the sell side anymore. The buy side is all about increasing the wealth of the middle class via pension funds and mutual funds and ETFs and other derivatives, and they make a tidy amount of money on it. They make a lot of money on it. So that's their goal. Small funds managers, the small funds management companies are firms with less than 3 billion assets under management. So check if you think somebody is a great asset manager, you better be sure that they have more than 3 billion because they are retail. And most of them are just salespeople with a franchise. Giant buy sides have trillions of assets under management by comparison. Trillions. Small funds companies, also known as asset management firms, do not have the experience, expertise, or skill of the giant buy side or sell side. They don't have a financial services education or degree or license. They're just a franchise. Smaller fund companies are a big group of 10,000 to 15,000 companies and are often franchises, but there are many, many independents who are just started a little small fund and they take people's money and they short-term trade it and they lose money. And that's what's happening right now. They're losing big time. A lot of these companies will go gone like they did during the pandemic. They will go bankrupt. Their limited experience and lack of formal financial services degree puts them at a disadvantage. They're often on the wrong side of the trade. They use VWAP orders, which is very dangerous. I'll talk about that in a little bit. How a top to a downtrend begins. Dark pools begin their hidden slow rotation to lower inventory of a stock before the company revenues start to decline or before a crisis occurs because they can see it coming. Rotation is a slow or steady selling of stocks before a downtrend begins. Dark pools use special time-weighted at price orders that trigger on a specific penny or few pennies. So the range is very tight and candles are very, very small. That's why they're hidden. That's why you don't pay any attention to them. Little tiny candles, oh, that doesn't mean anything. It means everything. Dark pools are selling into a new high or speculative run that are created by retail groups and smaller funds buying at high risk. So as you drive the prices up, they are quietly trying to get out of this stock because then they round the tops. Instead of peaks and valleys, it's more rounded action. And so you can't see them because they're selling and they're providing the sell side to these stocks as they're moving up. The shift of large lots from buying to selling alters the balance of power. Dark pools can have a huge multi-million lot order open for several days, and it just pings and picks up small lots all the time. So yeah, and it can take a long time for them to fill their orders. It also triggers heavier than normal HFT selling and pro trader selling. As soon as the pros realize that the dark pools are rotating out, they get ready for the downside. And you can see that this gapped up, and pros would be getting out here and then quickly shifting to selling short. And this is something you need to learn. This was just a little tiny buy on a dip. Oops, bad idea. Boom, down it goes again. As selling increases with the speculative buying, volatility begins to alter the trend. So we have volatility because we have large lots selling and we have small lots buying in frenzy, thinking it's going to go on forever. It will never collapse. Just like you think, oh, this market's never going to come back up. I got to get out. Void of buyers. Contrary to popular retail traders' myths, the downside is not an inversion of the uptrend. The two are totally different. Uptrends require propulsion like a rocket via demand from more and more buyers as the stock runs up. More buyers, buy, 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 buy. To sustain the run, the upside needs more and more buyers in a frenzy of speculation. Volume has to be increasing. The downside runs do not require more and more sellers, nor do professionals or HFTs sell short drive the price down. They don't. They just set that sell short order in there and they wait. And since there's no buyers, the computers drop and gap that stock down. Stock prices fall like a rocket without fuel. Gravity pulls them down, not lots and lots of orders in the beginning of the downtrend. Price falls due to a sudden lack of buyers. I call it avoided buyers. This is very important for you to know as a terminology. Stocks free fall without heavy selling as the buy to cover orders of pros are well below the current bid add price. So they're going to drop this, their buy to covers way down here and just wait. And the stock just free falls. There's no buyers. So then there's some more sellers that come in and then they buy to cover and they act as market makers. Totally legal and very lucrative. Why selling short is legal? The stock market is obligated by law to fill all orders on a timely basis. If everyone is selling stocks, then someone must buy those stocks. Professionals use sell short orders placed at a high and then buy to cover is placed much lower at a technical support level. Where is that technical support level? Why selling short is necessary, an important part of the stock market. Without the sell shorts, markets would go into an extreme, severe, deep free fall without any buy to cover orders, as no buyers are going to buy a stock that is in a free fall. So you're going to have a collapse of the market. Why do you need to learn to sell short successfully? Why do you need to learn to sell short successfully? Selling short gives swing traders and day traders more trading opportunities. Selling short actually has higher profit potential as stocks tend to gap and then run down even faster. This is due to the HFTs gapping the stock down at market open, no buyers, it just collapses. Then smaller funds VWAP orders trigger and accelerate the selling as sell orders volume increases. So volume weighted at price is the most dangerous order type there is. The smaller funds use it, and every time more volume comes in, the faster the market runs down. So the secondary part of the market for the downtrend is even faster than the first part. The downtrend is not the opposite of the uptrend. When the stocks drop in price, they tend to fall 2 to 3 times faster than a stock rises in price. This is because the falling stock doesn't need more sellers to fall down to the first tier support where buy to cover orders are waiting. As buying by retail groups evaporates, pro traders take profits before the stock starts to fall in price. Then pros immediately sell short orders with a pending buy to cover orders well below the current price. Momentum to the upside requires more and more buyers. Momentum to the downside accelerates as fewer buyers purchase the stock. If there are more people wanting to sell a stock and no buyers, the price plummets rapidly. So TechnoTrader has a lot of educational services for you. I've written over 50 courses over the last 27 years for my professionals and for my students. TechnoTrader is the only educational company that teaches a complete process for selling short. What market condition is present at the time? We have an intermediate term correction. It is volatile, and the volatile markets require a certain type of structure to your trading. Where are technical support levels? All professional traders are technically inclined. They all are technical traders. There's fundamentals in the chart, but they also use technical support levels. Which market participant is controlling price at that time? At any given time, there may be one primary, like in bottoms, the buy side institutions are supporting the bottoms. How does the bottom form? Well, the buy side starts buying the stock when it hits their buy zone, and it may be above the lowest low before the stock starts moving up and forming that nice round bottom or whatever, W bottom or whatever it's going to form. Inverted head and shoulders no longer exist because the buy side institutions use their dark pools. You can't see what's going on and they're slowing the price down. That's what they do recently, is they're just slowing that price down by just buying enough and buying enough, trying to slow that downside action down. They don't really disturb price much, but they do slow it down. Sell short candlestick entry signals. There are specific candlestick entry signals that are new to our markets. They started occurring with HFTs and other activities that were going on, and I started noticing these in 2018, 2019, all through the pandemic. And even now, these new candlesticks entry signals are very strong and very powerful because they're what the pro traders are using. You see the pro traders and you can get in with them. Hybrid leading indicators and the variables of sell short indicator settings. I wrote a lot of hybrid leading indicators, and these indicators are my indicators that I share only with my students. And the reason I do that is because it takes a lot of training and understanding of what's going on. These aren't just simple crossovers or something like that. Most of them lead. What does that mean? That means that the indicator will spike up on a white candle, indicating that the market is about, that candlestick pattern is about to reverse. And it's just perfect because you can get out at the high the next day or that day. Sell short risk analysis, run gain potential. What is your sell short risk analysis? Do you have it? Do you know what your risk is? All my students do. Run gain point potential. How many points can you get in that run before it hits support? And profit versus risk analysis. You have to set your stop losses differently than what you're doing right now. Where to place stop losses using professional style support levels. Each trading style has a different support level, and each trading style must use, the pros never use percentages. Why? Because there are so many ways to knock a percentage out. And when they see all these 8% or 10% percentages you guys set out there, and they're going, okay, these are easy to take out. And so you're taking out, and then the stock moves in the direction you wanted it to, and you're out because you're stopped. Oh, stops don't work. Stop don't work. Percentage stops don't work. Properly placed stop losses work perfectly. Exit signals and exit strategies. You must have exit signals and you must have exit strategies. How are you going to get out of this position? What are you going to do if this happens or that happens, and how you monitor it? Swing trading is a fast trading style. Velocity is even faster. Velocity is when there is no overlapping of price. Momentum has an overlapping of price. How to select the lowest risk stocks using the TechnoTrader Trade Evaluator. We have all kinds of tools in our charting programs that make life easy for you. It should be fun, it should be easy, and it should be extremely profitable. Some of you are hobby traders. The IRS is very strict about this. They say, oh no, we can't have you trading. If you're a hobby trader, you can't take off all your expenses. Yes, you can if you're a semi-professional trade management planner for monthly income without the hassle. So please visit my website, technotrader.courses. These are some of the samples of what we have. These are free. You get to just watch them, and it takes you through step by step. I'm not for everybody. I expect my students to be committed and really work hard and learn and become very, very successful. I have one that's managing a $100 million hedge fund right now. So please come. You can watch these at your own leisure, and you can watch as many as you want. Then our special for today is for 24 hours. You can claim your free gift. Is a $99 value. Is more education, expanding what I've talked about today: relational technical analysis, fast stock pick analysis, precision entry and exit signals. This is all the information you need right here. And I have 1 minute to answer a couple questions. Any questions? I can't read that.
Hi, Martha. I want to say it's a brilliant presentation. It's one of the best I've heard, because you talk about a lot of the professional things the retail traders don't have a clue about, and I really don't have the ability to teach them all that stuff. But you know that, and especially things like the nudge trades and dark pools and all the stuff that they're clueless about. So you're really smart. I just salute you. It's a great presentation.
Yeah, come and join. Come and do the free courses. Even if you don't want to take a course, it's fine with me. You'll learn a lot and it will improve your thing. I'm doing this in my retirement because I love to teach. I get so excited when a student comes to me and tells me they're going semi-professional or whatever they're doing, or that now they're fully retired because they can cover their expenses and they're making more money than they ever made when they were at their jobs. And it's just a very self-fulfilling. It's my legacy to the community of traders. The better you become as a trader, the better the market will be. The stronger we'll all make more money.
Right, right. And you have so many brilliant insights. You know, like you teach them about the microsecond HFTs and dark pools, and I think I tell traders, you know, there's a lot of they bleed their order flow into the tape slowly, not make it obvious, and all those kind of things. So brilliant! It's a really good presentation. So thank you.
Thank you. Thank you for having me.
Thanks so much. Yeah, always welcome to come back. Well, next we have Stephen Primo. Steve, are you here? Thank you, co-host.
Hi, can you hear me all right, Ken?
Yeah, I can hear you. Yeah, let's see.
Oh, great. I'm ready to share my screen if you like.
Absolutely, yeah. Yeah, good to have you back, man. It's good to have all these wonderful people speaking. You guys are all experts and pros, and I pick up new things too. So look forward to hearing your presentation, man.
Oh, great. Can you see that okay?
Yeah, that's good.
Okay, well, I guess I'll begin. Thanks to Ken for inviting me to speak again, and thanks to all of you attending today. You're gonna hear some great speakers, and I have a great educational class for you today, because today I want to talk to you about the only trading question that you should ever ask. I know a lot of you are always told that you should be asking and finding out. For example, I have so many students that when they first join up with us say, well, Steve, what do you think the market's going to do? Or Steve, what do you think of this stock? Is it going to go up? Should I buy? Or is it going to go down? Should I sell? Or what do you think the perfect time frame is? Well, what we teach our students is that those questions are really not that important. The only question you should ever ask is what I'm going to be sharing with you today. This was something that I first learned when I first started trading on the floor of the exchange, and something I ask myself every time before I pull the trigger on each and every trade. So you'll learn what that is today. And I really think regardless of what strategy, regardless of what market, regardless of what time frame you trade, regardless of what style you have, this will increase your odds for consistency tremendously. So welcome. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 48 years. I started my career on the floor of the Pacific Stock Exchange, where I was on the floor for 16 years, and 9 of those years I was a specialist. If you're not familiar with what a specialist is, it doesn't mean that you're more special than anyone else. But in the old days, if you ever Google those pictures of the trading floors, where all the people making weird hand signals and lots of paper on the floor, those gentlemen and gentlewomen behind those large wooden podiums were called specialists. In the old days, if you wanted to buy or sell a particular stock, you would call up your stockbroker on the phone. There was no electronic trading. The stockbroker would take your order, let's say to buy 100 shares of IBM. He would in turn call the floor broker for that particular firm and say, I have a customer here who wants to buy 100 shares of IBM at the market. He'd take the order and walk up to the trader who specialized in making a market in IBM. So that was one of the stocks I made a market in. I also made markets in waste management, US Air. I did that for
Steve,
9 years.
Steve, I'm sorry to interrupt. Just a quick question. Did you
Sure.
want to did you want to show your face because it's not showing if you have your camera
No,
on?
no, I just have a PowerPoint presentation.
Okay, that's fine. Okay, well, back to it. That's like one of the traders asked. Yeah, good stuff. Yeah, you're listen up, people. He's one of the good ones. So thanks, Steve.
Okay, so I traded through the crash of '87 and the bull market that followed. After I left the floor in the mid '90s, I managed money and traded my own account. And about 15 years ago, I teamed up with AmericasTopTraders23April, and we developed specialist trading with our one goal, and that was simply to educate traders around the world. So that's what we do here, and you'll see that attention to educating you today in our educational presentation. Okay, so before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying this question to different charts, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, we have a lot of beginning students, and I also see a lot of names here that I'm not familiar with on the attendee list. So if you'd like more education on a daily basis, feel free to follow us on X, formerly Twitter. There's our handle right there. You may want to copy that down at SPCLSTTRADG, 2 T's there. It's abbreviation for specialist trading. Every day I post anywhere between 4 to 7 different snapshots of signals our methods or strategies have generated, and also little bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on I was going to say Twitter, on X. Okay, so I'd like to start out with some facts, okay? I want to focus on something that this has actually been around, and this has been a constant since the beginning of time. And it really doesn't have to fit in the category only of trading. It fits into any other category you can think of. But let me share with you what these facts are. First of all, 80% of all traders lose money. And when I say lose money, I don't mean you're going to have a couple of bad trades or maybe a couple of bad months. Basically, 80% of all traders will ultimately fail. They'll give away a good portion or even all of the money they've put aside for trading. The next fact is that 15% of all traders will just break even. Okay. Now, this really isn't that unmajor of a feat to accomplish, because actually with the markets and volatility, it's pretty good just to be breaking even actually. But after all the hard work and especially money you put in the market, though, you don't have a lot to show for it. Now, ultimately, the final fact is that means that only 5% of all traders will be consistently profitable. Now, if you imagine here we have 100 people roughly listening to today's presentation, only 5 of the people listening will be consistently profitable. Now, if you want to see what that looks like on a pie chart, this large portion in red right here represents the percentage of traders that will ultimately fail. This slice here in blue represents the amount of traders that will break even. And this small little green little slice here, this little sliver, represents the percentage of traders that will ultimately be profitable on a consistent basis, just the 5%. So how is it possible that the majority of all trading profits are captured by such a small percentage of traders? I truly believe, and my mentors taught me this as well, that there is an infinite amount of profits to be captured, not only throughout the year, but on a daily basis. So how is it possible that a small portion is able to capture them, leaving the rest unattainable to the majority of all traders? Well, it really isn't that difficult. Actually, it's actually very simple. These traders, it's 5%, excuse me, have all learned how to be in sync with the trend, how to be in sync with the particular market they are trading. Now think of it. You will only lose money when you are out of sync with the market you're trading. In other words, if you buy something and it goes down, well, obviously the market wants to go lower. And so you're betting that it's going to do the opposite. So you're out of sync with what the market wants to do. Or if you sell something, going short, buying the puts, going short the stock, whatever you want to do, and it goes higher and higher and higher, obviously you're losing money, not because the market is not, obeying what you want it to do, or it's not cooperating. It's because you are out of sync with what the market wants to do. You see, the way you really become a consistent trader is just simply wanting what the market wants to do. If the market wants to go up, well, then you're a buyer. If the market wants to go down, then you're a seller. It's really that simple. I look back when I used to trade and I realized that this was just too easy, something that my mentors taught me. And I said, that's just too easy of a concept. But I thought about it and I looked at my trades and I thought, wow, that's really what I've been doing. I've been losing because I'm out of sync with what the market wants to do. Here's the only trouble. Everyone has a different idea of what the market wants to do. Everyone and their cousin has a different indicator, a different pattern that tells them what the market wants to do. Well, I have what I feel is what is the most powerful as well as the simplest way in which to determine what any market wants to do. This was taught to me some 50 years ago on the floor of the Pacific Stock Exchange, and I continue to use on a daily basis. So let's begin today's educational presentation. And I want to start out with this. What if there was a tool designed to have you in sync with the overall trend? I know a lot of you say, well, I already have that tool. It's a moving average crossover, or it's a pattern that exists, or I bought this $5,000 indicator from some so-called educator, and it doesn't work, but it's supposed to tell me what the market wants to do. Well, you already, believe it or not, have access to this tool, all right? It's simply the buy-sell line. Now, before you go out and say, oh, okay, well, I've got to actually purchase some $5,000 indicator before I can use this. No, as I stated, you already have access to this. The buy-sell line is just a 50-period simple moving average. Too simple, right? It doesn't matter what platform you have. It doesn't matter what you're using to trade. It makes no difference what time frame you're looking at or what strategy you're using. But you can always plot the 50-period simple moving average. And here's how to apply it correctly, though. In order to use the buy-sell line properly, all you have to do is ask yourself this question before each trade. And this is the question, the title of today's presentation, the only question you should ever ask yourself. And you have to ask yourself before you pull the trigger. And that question is, where is price in relation to the buy-sell line? That's it. So once you plot the 50-period moving average, ask yourself, where is price in relation to the 50-period moving average, or what we call our buy-sell line, because it tells us whether we should be a buyer or a seller. And you'll only come up with two possible scenarios, because if price is above, well, then you will only have a buyer's bias. And conversely, if price is below, well, then you will only have a seller's bias. Now, you notice here, I said a buyer's bias or a seller's bias. I did not say, well, if price is above, then you'll buy at the market. Or if price is below, you'll sell at the market. Remember, this is not a strategy. This is just a very powerful but simple tool to tell you how to be in sync with the overall trend. Once you know what the bias is, well, then you can apply any strategy. It doesn't have to be one of mine. It could be someone else's, or it can be one of yours that you've developed, or any technique or any method. any system, as long as you're in sync with the bias. That's how powerful this is, but that's how simple trading can be. So we're going to talk about identifying the overall trend and show you how powerful this is. And I'm going to show you how simple it is to apply on our platform. I developed this platform with Pro Trader Strategies with one goal in mind: to make trading simple and to get you in sync with the trend. Now, we're going to show you some current examples in different markets and different time frames to show you how simple and powerful this is. But first of all, I want you to go back and look at your last, let's say, 10 or 20 trades, okay? I can almost guarantee you that the reason why you lost money, the reason why you lost on the trade, was because you were out of sync with the buy-sell line, which is the 50-period simple moving average line. So this is what we're going to be talking about and showing with you right now. But before we begin, one more time, let's take a look at our disclaimer. I'm going to show you some charts on our platform, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. I just want to take a second here to toggle over onto the charts on our platform. If you can see this, here's the first chart. Here's a chart of Tesla taken up to this morning, okay? Now, as we can see, Tesla was moving up very nicely at the end of last year. And then at the very end, in the beginning of this year, it's been going straight down, as you can see. Sure, it's had a couple of nice little bounces, but then it goes lower, another bounce, lower, another bounce, lower. So the way traders usually lose is that they'll get involved and buy something and they'll say, hey, this is working great. Wow, I've got a tremendous profit. And then when things change, they continue to hang on. Maybe they go to that chat room and says, well, you got to buy some more. This is a very good support. Look, there's a very good support line here. This is where all the institutions are buying. And then it bounces and then makes lower lows. And then they say, well, you got to buy more now. And by this point, you're losing sleep at night. You're hiding your statements, your account statements from your significant other, and you're thinking, boy, I've lost a tremendous amount of money. Where's it all gone? Here's how the buy-sell line could have helped you. And once again, on our platform, we make it simple. We actually have 4 different ways to view the buy-sell line. You can view it as a simple 50-period moving average, or on our platform, simply go to the buy-sell line little icon here, click it on, and here's our most popular, what we call our fluid buy-sell line. What this does is it plots the 50-period moving average right here, but it colors anything above with a blue background and anything below with a red black background. So what we call this is our blue buy zone, meaning that this is where you have a blue buyer's bias. Anything below is a red sell zone, where you have a seller's bias. Now you see here how it was going up very nicely. And then right here, at the end of January, beginning of February, you had multiple closes below. Now, the rule of thumb is 3 to 5 closes on one particular side will tell you what the overall trend is. So here we had 1 close below, not enough to tell us that we were going lower because we bounced up again. But now we have 1, 2, 3 consecutive closes. This was enough to tell us when price was trading roughly about 390, either to exit the stock if you were long, take your profit, get out, or maybe raise your stop so you can protect your profits, or if you're a more aggressive trader, to start looking for some selling opportunities. Maybe your system generated a sell signal there. Maybe it was going to generate a sell. But from this point on, you should only look at Tesla with a seller's bias. Now, this was roughly when the stock was trading around 390. It's come all the way down to the low 200s. Do you think this tool, this simple tool, could have helped you? Remember, it's not based on anything overcomplicated. Remember, my mentors taught me, they said, Steve, the reason why you're losing money is because you're overcomplicating your trading. You're making it more difficult than it has to be. And they said it's the easiest thing in the world to overcomplicate your trading. Anyone can do that, but it's the most difficult thing in the world to simplify it. And the buy-sell line is the simplest tool I know to get you in sync with the overall trend. Now, we have a number of new students that have come on board with us, and they said, gosh, I wish I had known about this simple tool because I've lost so much money not applying, buying more while something is in the seller's zone, or buying something as it continues to go lower, or selling short while it's in the blue buy zone. Remember, you only lose money when you're out of sync with the market you're trading. Let's look at Hertz, okay? Let's look at another chart here. Now, this stock was basically doing nothing, going sideways, and all of a sudden it had a really nice run up, in the last week. How could the buy-sell line have helped us? On our platform, it's as simple as clicking it on the buy-sell line. Let's go down to the fluid again. And as we can see, this entire time we were in the sell zone. Sure, we had 1, 2 closes above, but right back down below. So not enough to tell us. Another 2 closes above, right back down below. But now look what happened. 1, 2, 3. So at this point, we know now that you should be viewing this stock from a buyer's perspective. You should not be thinking, well, this is too high. I shouldn't be doing anything. You should look to buy. Now, we're not saying to buy at the market. Remember, this is not a system. It's not a strategy. But now you know that this stock is now in the blue buy zone. So any strategy signal you get should be looked upon from a buyer's perspective. Now, we can also apply this to investing. Now, we know not everybody trades on a daily time frame. Let's look at a monthly chart of Costco, all right, or a weekly chart, I should say. I'm sorry. We see here in hindsight, this stock has been going straight up since May of 2023, all right, roughly about 2 years. Now, traders love to play the blame game. They love to say, gosh, how come I didn't find this out? Why didn't I know that this was going to go up? Well, this is not a predictive tool, but if you had simply applied the buy-sell line, you at least would have known that right here, there were consecutive closes back in May or June of 2023. So from this point on, you knew that this was in the blue buy zone and you should have had a buyer's bias. So you should have been actively looking for signals, regardless of what system, what strategy you use, to go long. You don't have to sit there and go, gosh, I didn't know anything about this stock. I didn't know. On our platform, you can scan for these on a nightly basis or a weekly basis or a monthly basis. And you see here how at the beginning, or I should say mid of February, a couple of months ago, we came all the way down, touched the buy-sell line, and bounced on a weekly time frame. This is a phenomenon you see happen so many times. Let's look at an entirely different market, the British pound, okay, for all you Forex traders out there. British pound was heading lower, and then all of a sudden started to head up much higher on a daily time frame. Could the buy-sell line have helped us trade this? Sure it could. Click it on the fluid side, and you can see it was in the blue, I should say red sell zone last year, coming into mid-February. At this point right here, we had consecutive closes above. So at this point, you knew that the British pound wanted to go higher on a daily time frame. So you could have been looking for strategy signals, whatever you wanted to look for, and you could have taken advantage of this nice run-up it's had in the last 2 months. And once again, there's that phenomenon where it came right down to the 50-period moving average and bounced off it again. Let's say you're not a Forex trader. Let's say you're not an investor, but you're a day trader. Okay, here's a 15-minute chart of Microsoft. Once again, this stock was heading lower on a 15-minute time frame, and roughly, just starting roughly a couple of days ago, it started to move up. Could the buy-sell line have helped us? Well, sure. This entire time it was going lower, you could have actually avoided it if you don't like to go short, or looked for signals to go short, whatever strategy you're trading. Now, look what happened yesterday. Yesterday, on a 15-minute time frame, right here, we had consecutive closes above, telling us, the market's telling us, not some guy in a chat room, not some guy in TV, or not some economic report. The market was telling you, I want to go higher. Jump on board. Let's go up together, okay? It was screaming that that's what it wants to do. So you could have looked for any system, any strategy to go long, and look what happened. It gapped up today, right? This was on a 15-minute time frame. Lastly, let's look at a chart of Dogecoin. This is for all you crypto traders, okay? Now, cryptos have been heading much, much lower for the last 4 or 5 months. And I want to share with you what just recently happened. If we applied the buy-sell line, the fluid buy-sell line on our platform, the PTS Primo charting platform, you see here, it's been heading lower and lower on a daily basis. And look what just happened these last 2 days. Now, this is not enough to tell us that this crypto Dogecoin wants to go higher. But it's interesting. It's something to track because the last 2 days, it has closed in the blue buy zone. Remember, 3 to 5 days are needed, or 3 to 5 bars, because you can use this in any time frame. 3 to 5 bars are needed to tell you what the overall trend will be. Now, obviously, we had a number of consecutive closes below here, so it was telling us that the overall trend was down, and you could have exited and saved yourself all this money and loss, and then we may be getting back up here. Now, we're not telling you to buy Dogecoin. This is not an advisory or a signal service. We're just telling you what the market is displaying here right now. You're still going to need at least 3 to 5 closes in that blue buy zone to generate some type of overall buy signal with the buy sell line. Okay. All right, let's go back to the presentation and let's recap what we shared with you today. Remember, you will have a higher level of consistency if you only buy above the 50-period simple moving average and only sell below the 50-period moving average, what we call the buy-sell line. Now, you don't have to have our platform. You can do it. Anyone can apply the 50-period moving average, but we make it much simpler we have 4 different ways. I only shared one with you today. That's our fluid buy-sell line, which we developed, and you'll only find that at Pro Trader Strategies. We developed and designed this to make it simple so you can have the color background for it, okay? Now, if you don't believe how powerful this is, once again, go back and look at your last 10 or 20 trades. I can almost guarantee that the reason you lost was because you were selling short above the buy-sell line and buying, going long below. Now, let me tell you about a special offer we have for all of you attending today. Because of our association with Ken, we have a great offer for more education. It's called our trading floor edges. These are many more high probability trading edges that I've taken from my years on the trading floor. Edges that you won't find anywhere else because they're from my nearly 5 decades of trading. 2 techniques that will elevate your trading you won't find anywhere else. 4 ways to be in sync with the overall trend. I just shared with you one. I'll develop and show you the secrets for the other 3, okay? 3 steps to a successful trade. Things that you can apply to any market, any time frame, and any strategy, okay? How to fine-tune your entries. So many of our new students say, Steve, my strategy is okay, but my entries are terrible. I either get in too early or too late. Well, we'll show you how to fine-tune your entries. Same thing with your exiting techniques. How to have next level exiting techniques. How to know whether you want to stay in the trade longer or get out quickly. It's all up to you. We share all of this. This is a 10-course video course, which includes over 48 years of trading experience. But here's one of the best things that our students have told us and that you'll get in this 10-video course. It's our superior candlestick trading edge. Let me share with you an example right here. Now, candlesticks are very popular. I venture to say that most of you are probably applying or have applied candlesticks in the past. And sure, they work very well, but they're not as consistent as most people think. Usually candlesticks in the traditional means I haven't found a lot of consistency because candlesticks are usually applied as reversal tools. For example, we see that we have a nice uptrend here in this older chart of PLTR. So traditional use of candlesticks would say, look for a reversal, all right? So here we have a reversal. It's a dark cloud cover pattern. It's a sign that most likely this uptrend is going to end. And it's followed by another one, an even more powerful one, a bearish engulfing pattern. These are 2 real strong reversal candle patterns telling us that most likely the trend is going to reverse, either to exit your long or more aggressively to go short. So let's say that you're a candlestick trader. Maybe you took that $5,000 course on candlesticks and you say, okay, I'm going to go short. I'm going to sell. And then this happens. Look familiar, right? This is why we say there's not a lot of consistency. In my own opinion, what I've seen in traditional candlestick trading. Here's what we share with you, our superior candlestick trading edge, because you would not have sold here at all. In fact, the bar before, you would have actually generated a buy signal and you could have taken advantage of that nice run up in price. So this is the superior candlestick trading edge that you'll learn as well in this 10-video course, okay? All right, so let's break this down. You're going to get the 10-video trading course edges. Now, it normally sells for $9.97. Okay, here's what we're going to do. Our association with Ken, we're going to drop it down to an extreme discount of only $19. Think of it, $19. I don't even think you can go out for breakfast for one person for less than $20 these days. $19, you're going to get nearly 5 decades of tips and techniques and methods that I've taken from my years on the floor that you won't find anywhere else. But this is for a limited time only. So don't sit on this and think about it and say, well, you know what? 2 weeks later, I'm thinking about this. I'm going to go back and see if they still have that trading floor edges course for $19, because most likely it'll go back to the nearly $1,000 price level. We're not going to stop there, though. We're going to actually throw in an extra bonus, and it's along with your purchase of the trading edges course for $19, we will also include a 50% discount on any of the product we sell. Our platform, any of our strategies, any of our indicators and tools half off on anything else. So this is a great way to become associated with us and to learn more about how we really want to educate you as a trader, a great way to become familiar with specialist trading and pro trader strategies. So you owe it to yourself to take your trading to the next level. Don't sit on this great $19 offer. Here's how to take advantage. Contact my sister site, which is Pro Trader Strategies. You can email them at trading@protraderstrategies.com, but I would highly recommend, because since this is a limited offer, giving them a call at area code 310-598-6677. They have trading consultants manning the phones right now. They'd be more than happy either to answer any question you have or take your $19 order over the phone, and you'd be up and running as early as today. Okay, now that link you see at the very bottom is the link that will take you to the info page, as well as I think you can sign up on that as well. It's not a live link, but you have to copy and paste that onto your browser. I think Ken may be posting that. I'm not sure if that's going to be posted on the chat box, but I'll leave this information up here. As like I said, it's probably better just to call that number, 310-598-6677. Now, I just have a couple of more minutes left. I see there's some questions in the question and answer box.
Well, Steve, great presentation. No, we're not taking trader questions because it gets to be too many, but outstanding presentation. I like the best thing I think about your strategy is that there's no ambiguity, with using that.
That's one thing we've learned over, when things are too subjective and they're too much up in the air, that's where students have difficulty. So everything is really cut and dry, black and white. It's either in the buy zone or the sell zone. Make it simple for you.
All right. Well, sounds good. Well, thanks so much, Stephen, for being here. Appreciate it.
Thank you, Ken. Great to talk to everyone. Thank you.
You too. Thanks, man. Good presentation.
Bye-bye.
Hey, Harry. Harry Boxer's up next from thetechtrader.com.
I'm here, Ken. Can you hear me?
Yeah, I can hear you.
Okay.
I need to let's see. Can you get your deck up by just or your thing by just clicking where it says share a green box and you'll be in good shape. Hey, well, ladies and gents, I'm really pleased to have Harry here, and Harry, apologize for taking away from market time. I was originally going to do it after, but he's one of the best traders in the world out there. I love Harry Boxer's style. He's really good. His entries and exits, and what he covers is a lot like I cover too. So he covers high volatility, great charts. He's the author of Profitable Day and Swing Trading, highly recommended book. And Harry, thanks for being here, man. Appreciate it.
You're welcome. And thanks everybody for being here. We're going to talk today about what I do, and what I do is and I look at, like, if you have a chart in front of you of ENSC, for example, that's a 1 minute chart. You can trade the same 1 minute charts as you can a daily chart. I learned a long time ago, back in 2001, when the market really got slam dunked, that in order to be in cash every night, you can trade intraday patterns and make a lot of money. There's a pattern going on right now, intraday, that I just noticed earlier when it popped and formed a wedge and broke out. Take a look. It's already gone from 660 to over 10 since I told my people about it. And that didn't take more than, what, half hour, 40 minutes? So what we're looking for at thetechtrader.com is for the stock to initiate a thrust. Note this volume here. This is interesting. When a stock trades high volume, 1.1 million shares, and it didn't go anywhere, that's called the high volume zone. It often precedes a move in a stock, and sometimes a dramatic move. Well, when people got wind of that big block that crossed, all of a sudden, pop, pull back, pop, trading halted here, 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 and then formed the wedge. When it broke the wedge, I gave a buy signal. The stock popped across 6.5, 3/4, and went nonstop to 956. You could have made a trade in 10 minutes there. And then pulled back and wedged. And before I got off the air, I told my people, keep an eye on the stock for a breakout. Well, it did break out, but it backed off. Still a chance that if the market does well today, this stock can continue. When we came in the morning, I have a list of focus stocks. What I do every morning is I come in LA time about 3:45 in the morning here, or 6:45 Eastern. And I spend an hour, hour and a half going over dozens of charts, related news. That's the only time I pay attention to news. I'm a pure technical analyst. I believe that people should stop chasing stocks and fundamentals and access their technical analysis for day and swing traders. That's what we do on our site. It's designed for day and swing traders who are ready to stop relying on what they think and start relying on what they see in the technicals. So, but the point is that no matter what the market's doing, no matter how much it was down last week, when we were down 1,000 points on NASDAQ, we had 2 or 3 stocks that were running on the upside. And we also play shorts. We also play ultra shorts. We've even this morning we played. Let me show it to you. The SOXSX. When the market got to a peak, I told everybody to consider the breakout right there at about 7, and it was at about 7:35 for a nice little scalp trade within about a half an hour. Earlier, when the market opened, pre-market, I should say, when it formed a 1, 2, 3, 4, that flag indicated to me that it was a bull flag and it's going higher in the 5th wave. Well, here you go, the big blow-off wave. As the market opens and everybody was sucked in, this stock went from 1018 to 1090, a 72-cent run literally before the market even opened or right after. And you can see when the market came down, this one backed off in the SOSX. The opposite turned around and moved up. Right now the market's rallying back again, and you can see why this is down. The other one is one of my favorite trading stocks, period, is the UVXY. This line was an easy no-brainer. When you see multiple highs across here, when volume came in right here and then pulled back and then broke out a bigger volume, we went long on the breakout over 33. The stock was 34.80 within about less than an hour. And I got everybody out because my target was 34.75. The high over here, 34.81, 6 cents above my target. And then it rolled over. But what I do every morning is I come in, I spend a long time. I put up a webinar about 5:10, 5:15 Eastern every morning, where I go over all my focus lists. I create a list of stocks I feel, and it could be 15 or 20 of them, that I feel have potential for day trades that day. And then put in my support, resistance, and trend lines and stuff, and then create a webinar for my people where we can go over these charts and I can show them which ones have the most promise. Let me show you some picks from this morning. Well, in addition to E and CE, but I want to scroll back and show you something. This is why we trade pre-market. Watch this. Okay, so it popped and formed a little pennant. The volume dissipated. I said buy this stock as soon as it moves out. I crossed 393. Within minutes, it was 467. Formed another pennant and had a 5th wave move to my target of 520. Look at that target, exactly 520. Now, this is all before the market opened. From 363 to 520. That's a 50% move in a half an hour. Look at the big volume. Usually when I see that heavy volume to a target, I'm a seller. Well, here's what happened the rest of the day. Torture. This is what I call death by 1,000 cuts. Doesn't mean it can't move back up again, but it never broke out above there, which is resistance, or above there, which is your next key initial resistance. Now, sometime between now and the close, this might very well break out above 355 and run to 380 or even 4 for a scalp trade, but we're done with that trade. AREB, check this out. So in the middle of the day at 10 o'clock, it suddenly surged from the wedge. And then it came down to the falling wedge, at which point I told my people, if it pops out across the falling wedge and creates any kind of pattern, it popped it from the little flag in here and then took off with volume. That's where we went in about 298. And then with minutes, it was 374, a 75-cent pop in 15 minutes on a less than $3 stock, huge percentage move. But then in Elliott wave terms, this is a 1-2, this is a 3-4. In Elliott wave terms, stocks tend to move in 5 waves. So when I saw the breakout here, I put another buy on it, second buy day trade at 355. And within minutes, it was almost 397. Another nice little scalp trade. And then now you can see it's pulled back. And even the pullback is orderly. But one thing and one rule of thumb, the 5th wave consolidation is always less reliable because when a 5-wave move comes in, it usually creates a more or a deeper retrace, or at least a longer consolidation. Check out this one. So CEP exploded and pulled back. From the little wedge, that's where we went long. At about 13 and 30. Within minutes, it was 14.95. That's a huge move. And now the falling wedge broke out, pull back. And here's where I said, buy it if it takes this out. across the double top. See it? And then the run up, and now another pullback. So at the end of the day, right now it's 15 from where we went long at 13.30, $1.70, 20% pop. And it still looks like it's still going. PEGA, it's Pegasystems. Now, pre-market, I look for stocks that spike, and this one happened to be on news, and it pulled back and formed a little wedgie there. We went long at 82.30. By the time the market opened, and a little bit after, from 82.30, it had gone to 93 for more than 10 points. My target was 91, so from 82 for a 9-point gain. Most of us sold it, and it spikes up here. Here's a good one, UPXI. Look at this move. I think I covered that already. But if I didn't, this morning, pre-market, it popped and pulled back. It was very quiet. And suddenly, it surged right there. That was a breakout. We were long about 9.25. It popped quickly to 10.49. And then pulled back and formed a perfect little wedge. And then exploded nonstop to over 12. So from 9.25 to 12, great trade early on if you were there. Then it came down, held support, and ran right back up to a new high, pulled down and did it again. So you play the waves. 1, 2, 3, 4, fifth wave right there. Here's one PLTU as Palantir's ETF. I like Palantir. And when I saw the parent stock pop and form a wedge or flag, I said, if this breaks out here, we go long PLTU. I was right here at about 37.25. And within 30, 40 minutes, it was 39. And my target was exactly 39. I hit 39.06. So we had 30 targets at 38 and 39, and both targets were reached. And that's the way we trade our intraday 1-minute patterns. For a couple more examples, SCRV, pop wedge, that's where we bought it right there at about 587, and then exploded within minutes to 606 and backed off from the wedge, a bullish one, and then ran to my target, which was 625. We hit 627. How do I measure targets? Well, obviously I've been doing this for over 50 years, folks. And you can see that I just view certain patterns by my eye that tell me this is a go. Actually, this is a 1, 2, 3, 4. I thought maybe we're going to get a fifth wave. It wasn't to be. So what happened? Anyone who was in there on my recommendation, I told them to stop under 6. Within half an hour, it was 585 and bounced back. So it's kind of going nowhere. But we're able to get a nice trade right on that leg there. SMMT is one of my favorites. Look at this chart. Well, first of all, we did a great swing when it popped and pulled back here. When it broke out, we went long in around the 8 range. And within 2 months, it traded 33 with 300% move in about 60 days. After that big move that saw it eventually go from a low of 2 to 33 and 34, so 17-fold increase in 4 months roughly. Obviously, you're going to need some long-term consolidation. We got that. But it broke out and pulled back. And when it popped again yesterday, I put a new swing on it at around 26 and change. And this morning, it reached 32.70. Here's your 1-minute intraday chart. And you can see how it popped, pulled back, and pop again. And I'm waiting for this to make another move. I think it will. I don't think it's done yet. And there's a coil forming right there. You can see the bull coil on a 1-minute chart. My target's now at 34 and 35. And also, when you go back several days and take a look at the angle of ascent, that would be right there in the rising channel that it's formed. You'll see my targets might be 33.5 and 35. And those are my targets I gave to my tech traders earlier. VNet was another stock midday. This wasn't pre-market, but sometimes after the market opens, you'll see a stock spike from a little wedge, breakout. We bought it right there, 565 to 6 and change, and then where was it stopped? Right there. Anytime the prior low is taken out, I always tell people stop half there and half under the moving average. So you were stopped in this zone at an average of about 575. It's now 536. CEP, interesting chart. We showed you earlier at pop falling wedge. When they break out of these falling wedges, you want to go with them. TEM, a perfect setup pre-market. I want to show you this one more time. I like to go back in time and show you the setup as it occurs. There's a bull flag. I'm waiting for a pop. Look at that pop right there with volume. I said if he pulls back, or you can buy half here and half if it pulls back on low volume. Always, that's my target. Or half if it breaks out above the high. Pop. Exploded literally from 47 to 49. Went to 50. That was my target, by the way. Coiled. And eventually got to 51. And change. Almost, 51 change. And it's pulled back now into the afternoon. Coiling. I consider this a bull coil. And this white dotted line is a volume weighted average price, or VWAP. It's amazing how many traders follow it. And you can see if a stock holds the VWAP, bounces along it, it usually will coil and then break out again. So keep your eye on Tempest AI, up 7, but itching for more, in my opinion, should the market rally. Let's take a quick look at the S&P right now. You can see that tried an inverse head and shoulder breakout and then faded. So I'm not sure what they're going to do with this, but on an intraday basis, on a daily basis too, I want to show you, folks, when you see a 1, 2, 3, 4, 5 wave type of decline, and then you get a spike to resistance and a gap, you pull back and test and form a nice V bottom with a right hand extension. That's what this is called. And then pop to resistance, you're going to get a pullback, of course. Until the S&P gets over 5480, even 5500, this zone right there is big. You don't want to market to fail here. If the V bottom or the right hand extension is true, you should get a little bit better volume in a breakout and a move to about 50, almost 5700, 5680, 5700 would be your next leg. But that implies or infers that we do break out across this level. If we don't, and this turns out to be nothing but a big bear wedge, we'll have another wave down. And quite frankly, when you look at the overall structure, 1, 2 bear flag, 3, 4 possible bear wedge. Now, until it breaks out and tells me it's a base, or breaks down and tells me it's a bear wedge, we won't know. But nice action this morning. You can see we're giving back a chunk. Although they're trying to bounce right now. And sometimes you'll pull back to what we call the shoulder line of an inverse head and shoulders, right there. There's left shoulder, head, right shoulder, head, your head. Sometimes you pull back to the shoulder line and then go again. We'll see. To show you one other thing, as it's active still, is EWPK. And you see that head fake breakout? As soon as the stock does that with no follow through and breaks down under this support, this is where I tell my people to stop it. So it broke down underneath 880.85, trading at 819 now, up from 783. So it doesn't look good because it's forming this pattern below the moving averages, which are crossing over. It's also below support. If this breaks down, this is going to go to hell in a handbasket. I do want to show you some of my swing trades that I put out recently. I love Palantir, so the PLTU, which I showed you earlier, is a current swing trade. And here's why. Anytime a stock comes down like that, it has a V bottom and a big one. Look at this reversal day. 16 to 25 in a day, 9 points on 10 million. The biggest volume ever traded on this one, ETF. This is the exchange traded double bull ETF for Palantir. Left shoulder head and a weak right shoulder, but nevertheless a V bottom with a right-handed extension held here about 30. In that range. And he's a breakout, in my opinion. The volume's pretty good. We can get this to go. The next target's at 43.4 and then 48.952 zone. CRWV Core Weave, which just came public, it has not pulled back, but it was looking pretty good this morning, wasn't it? Take a look. It exploded right up to a follow through. We put it out yesterday, and it moved up to my 43, 44 target and pulled back in a falling wedge. I love falling wedges because inevitably, with the narrowness of the falling wedge, it moves to an apex and gets squeezed. Once it breaks out, often it's a good trade. The first pullback is often a good entry point as well. So keep an eye on core weave. And I showed you SMMT, but I want to just give this to you one more time. 1, 2, 3, 4, fifth wave may be coming. More importantly, breaking out of a major base pattern. Only resistance left is just under 34. That's my first target. And then I'm looking for 39.40. Piedmont Lithium, I like the lithium group and the materials group. 1, 2, 3, 4, 5 waves down, basic LE wave stuff. When a stock spikes down in the fifth wave and then reverses with volume, like this did, it's a buy. We put a buy on it around 6. It moved up to 7.62 already. My next target my target was 7.75. We almost got there yesterday, 7.62. Got an inside day on lower volume, a good sign. If it gets to 7.62, it's likely to be 9 and 11 as targets. So Ken, that kind of completes my presentation. I wanted to show people what I do, how I do it, what patterns I look for. I also want to emphasize to you folks that my webinar that I put up every day is alive and it's up all day. And you'll see me moving my lines and support and resistance and channels as I move through my charts and analyze them for potential, what I would call continuation patterns and or breakout patterns that reveal possible, additional trades for my traders. Or I'm just constantly updating the ones I already gave you and showing you how they're developing and whether you should stay in them, what the new targets and stops might be, where you might raise your stop if the stock is trending. Because one of the number one questions I always get is, look, I bought the right stock, but I sold it too soon. And that's because you decided to sell instead of just either that, or you take a piece off the table. You don't have to sell it all. That's the mindset of most traders. They make a decision, they sell it all. Well, if you had 5,000 shares of something, why not sell 2,000? And then if it goes up some more, you can sell another 1,500, and then another 1,500 when it reaches your third target. Or when it turns over and rolls over underneath your stop, you'll stop out. But the point is, if you keep raising your stops in an uptrend, you'll stay in the trade for the most part. So Ken, at this point, with about 10 minutes left, I'd like to take some questions from our listeners. Are you there, Ken?
Sorry. I said you're the best technical trader out there. You're outstanding. I'm really impressed. You're the only person out there I'd say who knows the technicals better than myself. I've never seen any educator save you who really knows their stuff like you do. So you're number one. So I highly recommend Gary Boxer. He's the best guy out there to learn how to trade this stuff. So good job, man. Thanks.
Okay. Well, if anyone has questions on any stocks, I'd be glad to give them my take in terms of the technicals and where they may be headed, where support and resistance might be, that type of thing. Is there anybody out there that has a question for me? I'm not seeing anything in the chat, Ken.
Yeah, no, they're not posting much. They're a quiet group, but it's okay.
Okay.
See, ENSC, Charles is asking about.
Well, I just want to be able to share this.
Here's one BITX from Barry.
Hold on a sec.
Yeah.
So folks, this is my website. It's called the Tech Trader. If you go to start a free trial, that's me, by the way. You want to go start a free trial, put your name, create a password, no credit card necessary. You come in for a couple of weeks for free, and you can make a lot of money. Most people tell me they made a year's worth of my fees for just the first trade or two, and while they were on their trial. So sign up for free trial, no credit card required. It doesn't cost you a thing, and enjoy the ride. I think most part you want to be a member.
Yeah, Harry's brilliant. Absolutely highly recommend him. He's a number one guy out there for tech trading. So he is I admire him. I learned a lot from Harry myself. So he's a brilliant guy. So good job.
Well, okay, thank you for being here, everybody. Look forward to doing this again, Ken. Call me anytime.
All right, will do, man. Thanks.
Bye now.
All right, thanks. Hey.
Yep.
All right, well, thanks to Harry for being here. It normally doesn't do these things during the market day because he's doing the market thing. Unfortunately, to schedule a webinar in, but he's absolutely brilliant. He has my unquestioned highest rating out there. So Harry Boxers, he's one of the guys to learn from. So good job. Well, traders are going to take a little break here, and then we'll have Mark Leibovich come, and then Price Hidley, and then Norm. So what do you guys think about the session so far? I mean, I've really enjoyed it. I've learned new things from each of our speakers. I always do, and because I pick, best and the brightest out there who can genuinely add, not the marketers, but people actually genuine experts. What do you guys think? Are we on the right track in terms of half our presentations? And so far, I've thought it's been a good thing for us. Let's see. Give me some feedback. Or not. Again, all these yeses. Okay, thanks, Bob. Hey, Jimmy. Yeah, it's always good to learn new things from people. So lots of people here. We will start in about 8 minutes with Mark. He's really good on volume reversal. I use what I learned from Mark years ago, and every single trade. I always look for large volume on a pivot and to support, and also to help me figure out how many shares to trade. So good stuff. All right, so I wanted to welcome everybody here. We're going to be getting underway with Mark in just a few minutes. You might want to stretch and take a break. We got about a 7-minute break. Doing what's all. We start in 7 minutes. I always like to get one good idea from each of the traders. And I always do because they're really smart and they know their stuff. That's why they're here. Music has a pattern, so the last little tune here. Tired of being a musician because it's fun. Anyway, well, good to see everyone here. We're going to get underway with Mark in just a few minutes. Hey, Mark, are you with us here?
Yeah, do you hear me, Ken?
Yeah, coming through great. Let's see. Wait,
My video is off. I'll turn, you have to,
wait, I'm sorry. I accidentally muted you. Okay, you're back. I'll make you a co-host. And that should open up the permissions to show your screens and all that. Hey, there you go. I can see.
there I am. How you doing?
How you doing? How you doing, man?
All right. Plugging along, enjoying the markets.
Yeah. And we also need to see your PowerPoint presentation. You have that too?
I'm just gonna pull, yeah, I'm gonna do that, plus pull up some charts too. So I'm doing a little differently here, but let's see if I can find the initial one.
And we need the share
Hold on.
button. You're not sharing. I see your face, but I don't see any charts. So you have to click the green share button and that'll.
There we go. All right, let's see where the
I still don't see your charts.
well, there's one there, right?
No. Let's see. Can you click on the green share button? Okay, that should do it. There you go. Okay, now you're good. All good. All set.
Yeah, but there's a little PowerPoint too I can pull up if I can find it here, a little introductory PowerPoint. So hold on there. Try to
Yeah,
find
yeah.
it.
It's been a while since I've seen one of the money shows. I know people always like hearing your presentations too, but I haven't been traveling much
Yeah,
lately.
I don't travel that much. I guess ever since the COVID thing, I've been just doing it from the house. It's easier, less
Yeah,
stress.
yeah,
I know I got a few dogs I'm taking care of. I feel like, I got to spend more time sedentary versus traveling.
yeah. What's the great thing
Well,
about trading, right? We can trade from home. We don't have to go somewhere, so that's great. That's one of those professions we can do from home and do just fine. So,
yeah, for the last over 40 years, that's been sort of
hmm.
my life story, whether it's here in Phoenix or Sedona or Chicago, wherever I've been. We're really privileged that we have this opportunity, Ken. You know what I mean?
Yeah, very true. Yeah,
You
I used
think
to
about it.
I used to be a consultant, but you're living out of your suitcase 30% of the time on the road, and it's not good for home life. So, this is much better. So,
Well,
yeah.
I used to work for brokerage firms years ago in Chicago, and
Hmm.
coat and tie, commuting in every day. And,
Right.
I mean, I'm sure you did the same thing. So,
So happy to not have to wear a tie. That was the ties and shoes are very uncomfortable. So, and you get more done at home because you don't have to commute. So that's great. Well, Mark Leibovich from VRTrader.com. Wanted to welcome you to our session. We've known each other many years, and you add a lot of value to the whole trading community. So, thanks for being here, and I'll let you take it away.
okay, as long as you can see the screen, here we are. So thank you for having me, Ken. I know we're keeping this short to under 30 minutes. Um, leave it at VR newsletters, VRTrader.com. You can see them all on the screen. We offer 50% off, half off promo code for any of our newsletters. I'm really excited about the blockchain letter with what's going on now in crypto and so forth. So, um, you know, we don't have a lot of time to go into a bunch of charts there, but I would definitely encourage you to take a look at this area. I just have this feeling that the biggest percentage gains ahead, in the next couple of years, are it's going to outshadow stocks in terms of what you could earn in some of the cryptos, and with what the government is doing now, with regard to the Bitcoin reserve and the crypto reserve that they're setting up. And, it's going to take about a year for legislation to go through and so forth, but you got to keep an eye on the sector. And I'm not only talking about Bitcoin, of course, I'm talking about a whole bunch of others. So I just want to bring that up to you. That's sort of one of my areas I'm really focusing in on in terms of not only trading, but more of a near to longer term perspective. Um, let's see here. Many of you old timers may remember me. I don't think many of them are probably on the screen, but I actually launched the Volume Universal Survey July 21st, 1979. So I've been doing it, well into the 40 plus year category, but now we call it VRTrader.com. Timer Digest had me Timer of the Year a couple times, which was great. I used to be an elf on the old Lou Kaiser television show back in the 1980s and 90s. This probably predates most of our listeners that have been around at that time. I would encourage you to take a look at my book, The Trader's Book of Volume, which is also in Chinese, by the way. It's about 500 pages, covers all the major volume indicators, including my own volume reversal, but it's really a terrific book. And I have to tell you, it's all the time we put into it in terms of trying to focus on the key volume indicators out there. And of course, I'm a believer that volume, precedes price. I'm still working on my second book, Profit Your Way Through the Use of the Volume Reversal Indicators. So we'll keep you posted on that, which will add a lot more to the strategy than just the pure volume itself. So I also want to talk briefly about my annual forecast model. I'm getting over a little cold, I apologize. So we've been putting this out since 1987. It's made some terrific calls. It's a cyclical forecast. It incorporates volume, but mostly cycles. And this shows you the 2023 forecast, which is the vertical lines, and the yellow line was the actual results. Bitcoin we did in the 2023 forecast, vertical lines, actual result yellow. And last year for the Dow Industrials, the forecast was our vertical lines, and the result with the yellow that you're seeing. So, I give you a hint on the 2025. I'd love for you to subscribe for it, but it was looking for a low in this current time frame. So I would take a look at it and see what it's showing for the rest of the year. But it's basically painting this time frame as an opportunity in the market. For those who want to listen to me weekly, I'm on housestreet.com, weekly podcast. Again, go to housestreetradio.com, and I post this on my website every week on the home page. So I have a lot of stuff here I'm just going to pass over. I just want to get right to the charts. We can spend a lot of time talking about my cycle indicators and a lot of other stuff. So I'm going to jump over to some of the charts and my volume reversal pictures, which I've put up here. So let me briefly introduce the volume reversal. This is the Dow Jones Industrials, by the way, that you're looking at here. The volume reversal is a change of price by a change of volume, coming off of a high on increasing volume. On a reaction day on increasing volume gives me a negative VR, and you get a positive VR coming off of a reaction day, which is with a lower volume, followed by a rally day on more volume. So I'd like to show you some other examples here, if we can pull those up. Let's see here. Let's see here. We got. Okay, so this is the Dow Industrials coming into from yesterday, and we generated what I call a positive volume reversal. You can see it on the right side of the screen. And the fact that my cycles are looking for this time frame. Of course, you can see we had negative VR 3-4 days ago when we had this sell off, I guess what you would call a retest of the lows. I also put up on the chart various moving averages for those who are familiar with what I do. Standard 200-day, 50-day, 150, just to give you an idea of what the moving averages are showing and what the street's looking at. As you know, so many people focus on the 50-day and the 200, so I want to see where it is. I also use a 533 stochastic. And I generally like to see it bottoming or turning up when I have a positive VR, or in this instance from 3-4 days ago, turning down when a negative volume reversal comes in. So that's sort of my momentum indicator. And outside of that, my technical work is really simple for trading. What you're looking at is really what I look at. So I'm long the Dow because I have a positive VR. We're short 3 days ago on a negative VR. And my general trading time frame is 2-3 days. We have a whole list of stocks that we recommend. It's on our newsletter, and those are more intermediate plays. But for traders, the VR is a terrific indicator for some short-term moves. And the study that I did years ago on the volume reversal is generally you get a move of 2 or 3 days following the negative or positive VR. So if you're a trader, it's a good tool. Many of my clients also use it intraday on weekly, monthly charts. So again, some use 5-minute charts, 30-minute charts. I don't have the stamina to do the 5-minute charts anymore. Used to be a floor trader decades ago, but as far as I'm concerned, the daily chart, pretty much solves my problem. So I'm gonna go over a bunch of other charts here I pulled up yesterday. So this is First Solar. Just to give you an idea of how the volume works and give you a sense of, this is a weekly chart. You can see the First Solar has been in a downtrend for many weeks. We had a pop yesterday on the story that that some of the import tariff situations might be lenient on solar in the top for one day, had a little key reversal day. But the main thing I'm showing you here is the negative VRs confirming the downtrend. And if you look all the way on the left side of the chart, when it was starting to move in an uptrend on the weekly, we were getting the positive VRs. So let me see what we got on the next chart here. If I got another picture of it. So this is a daily chart for solar. So it fine tunes it here a little bit. And just yesterday we had the positive VR on the news story, and it looks like it's trying to bottom out here a little bit. I like to see it stay above that 50-day moving average, but there was a nice trade in it yesterday. If you were following it, it is down a little bit today. So the way I generally use the VRs is I like to keep a stop at the low prior to the VR. So I think it was in the mid 120s, I think is the low from the day before yesterday. So I don't let it go beyond the low. And conversely, if I'm short, if I go all the way to the left side of the chart here, I show you a negative VR on the daily chart. If I'm short, I usually keep a stop right above the high from which the negative VR was formed. So my mental stop is usually the point from where selling started, and you don't want to go back through that point. Otherwise, you're probably wrong on the trade. And conversely here on the positive VR, I'm in for solar here, but if it takes out that low, I'm stopped out. And I'm a little nervous because, of course, it was a news-related event, but the stock is so cheap, and I'm more bullish than bearish on the market here. And solar has been very depressed, so I'm willing to give it the benefit of the doubt against that stop. This is another one of my favorites. This is a weekly chart of Constellation Brands. I don't know if you're familiar with it. That's Modelo beer. I see it all over the place, and I'm sure you do as well. Before it came down, whole series of negative volume reversals you can see on the top of the screen on the weekly chart. Then it had this huge break, and I love stocks when they kill them this way because usually it's setting up a great buying opportunity, particularly if a stock's 100 points or so from its high, as was the case with Constellation Brands. So this is an interesting but short story, but I got long the stock on the big break as soon as I saw some positive volume come into it, and then the story came out that Warren Buffett took a $1.5 billion investment position in Berkshire in Constellation. So makes me feel a little bit better that my technical work's working out. I am long Constellation. I don't know if they're going to turn around their beer business and so forth, but some of the beer stocks like Coors and others have been acting better here. So maybe with the recession that we apparently are experiencing in the U.S., there'll be more beer drinking going on. Who knows? In any event, you got the sports season ahead. So just in this case as well, we had a rising stochastic. So we're in there. I think I have a daily chart on it as well next to it. I do. Okay, so on a daily basis, you can see it flip-flops a lot here as a trade, but you understand it's $180 stocks or trades, from 170 to 185 back and forth. So it depends how you know, aggressive you are in your trading. But the most recent was a little positive VR, and it has trended up here since. And you can see on the just before that, if you were trading it or looking to exit your long, you had a little negative VR for a nice little break for 2 or 3 days. So again, following my rule that we tend to get movement in the direction of the VR for a couple of days, this is a good example that you get the negative VR, you can bet for the next couple of days it'll probably trend lower, and you could trade it accordingly, or conversely to the upside here. So it's a great trading stock. Believe it or not, I trade, even though it's $170, $80, I do trade it a bit with the VRs, and I also feel good about being on the long side with Warren Buffett there. So that's sort of a good one. All right, so this is Mara Holdings. This is, I believe, I guess you can define them as a Bitcoin miner. But we also have another example of another one, I think, coming up as well. Well down from its highs, positive VR. This is 3 days back, trending up here. It's up again today. Of course, it's tied to the strength in Bitcoin. So just a great confirmation with the technicals that I like. If I get a negative VR as an example, and then a positive VR, obviously I reverse my position or stop out depending on where I'm at. But there was some real nice correlation in the stock in terms of signals. Positive VR trending up, negative VR trending down. So I tend to follow the VRs here, and I am currently long MARA. And of course, if Bitcoin turns south on us, then we're going to have probably just pull back a bit. So we'll see if that plays out. This is the daily chart on it. That was the weekly chart, I believe I showed you a moment ago. And it's showing accumulation. You can see the positive VRs coming in, but I'm more concerned about the current trade, and we are long at this time. Okay. What we got here is CLSK. So this is Clear Spark. This is another Bitcoin miner. No VR here, but it's trending up, and with Mara moving up and Bitcoin moving up, we're also long this one. Hopefully volume starts to pick up and I get a VR. I don't need only a VR to buy and sell. I should clarify that. Obviously, you've got group action and you've got good volume. Back here, we saw some nice tradable positive VRs and a tradable negative VR. But the bottom line is this is another play in the same group. So I want to show it to you since we are playing that on the long side. This is the daily. That was a weekly. I'm sorry. This is the daily on it. So you can see it's moving up here. And let's move on to the next one. Try to get as many of these charts prepared ahead of time for the. Okay, so this is the Bitcoin Trust GBTC. Coming off support here. We didn't get a positive VR on it, though we had one, from several weeks back. And it is trending up here. Stochastic is moving up. So I'm just showing this for information purposes. I'm not trading long at this moment, though I am playing IBIT, which is the BlackRock version of Bitcoin. I don't
Hey,
know if I have
Mark,
a chart on that.
Mark, just a
Go
quick
ahead.
comment. It looks like you have like a big black square in the middle of the screen. Is there any way to clear that out? Hmm.
Hmm. You see the chart, Ken?
Just the very edge, there's like a big black screen, a big black square on top of the chart. Hmm.
I don't know where
Hey,
that
can you
would be.
click on the frame of one of your charts? Maybe that'll pull it forward. And there's like a black square in the middle. Hmm. See.
I apologize. I thought you were seeing it. Is that better?
No, it's been like that. I'm trying to. At first, I thought that you were doing that on purpose, but probably not. Can you try to like uh, pull up front? Click on the top bar of the two charts you have, and hopefully that'll bring it on top. So it says News, Tool, Chart, Trade, eSignal Apps, Windows, Option Support. You can click on the upper border of that.
Your screen is poor. Stop share. That's all I see on my screen here. I don't
Hmm.
see any other commands. Um, let's see
Yeah,
here.
Lisa
Maybe
said that black triangle had been there it's been there from the start. Yeah, and I didn't know that was
is
not
this chart?
intended.
How's
Okay, now
this
it looks
chart?
good. Now that's perfect. That's great.
Okay, now this is a live chart, so I'll just drop those are pre-created charts. So
Oh, yeah.
so it's not working. So this is the live chart. So
Much better. Yeah, now we can see it.
so we'll just I have to remember now which ones that I wanted to show you. Okay.
Oh, that's fine.
Yeah. So anyway, let's put up. Let's go back to the now industrials. That was the one I showed you at the very
Yeah,
top
there you
with
go.
the positive VR. So this is actually live for today. So this is actually more appropriate for our presentation because those were produced yesterday. So let's see now. Maybe our listeners could give me some suggestions here. Let's put up some favorites then. Let's put up like Tesla, since everybody talks about Tesla every day. So what's going on with Tesla? This is a daily chart of Tesla. We got a positive VR yesterday. Stochastic is moving up. It's up again today. Let's see what the volume was yesterday. So you did 120 million. And today you've done 114 million. So we're running at a pretty good pace. Couple hours left to go. Maybe we'll exceed yesterday's volume and we'll have 2 days of increasing volume. But I would be long Tesla here. Let's put up TSLL, which is the tracking stock. I apologize, Ken. I should have just put up the lives to begin with. So that's what the story was. All right, so this is the tracking stock, TSLL, which tracks Tesla. We did 167 million yesterday, and we're doing 109. All right, so you got 2 days of increasing volume here. So I'd be long Tesla, TSLL based on, generally you get, 2, 3 day or 4 day moves. And here on your daily chart of TSLL, you got your 50-day moving average, which is that blue line. So maybe it's going to try to go test that. We'll see. So this is just an example of a VR jumping in, and we jumped in. So let's see if we get another day out of it. But I'm encouraged that you got 2 days of increasing volume. I got a little bearish on the gold stocks. I'm still holding some core positions, but Agnico Eagle, for example, had a huge move up. I put out a bulletin a couple of days ago. It was actually on my podcast that gold has got extended here. So we put on a hedge. We put on inverse ETF, GLL, and ZSL for silver, but mostly GLL. But you can look at AEM here. Yeah, negative VR. Um, it was yesterday. It is down here a bit today. Stochastic has turned down. So I'm not saying that gold's going to hell or anything. I'm just saying that you got way extended, and you can see here on previous negative VRs how it did impact the stock and indicate that there would be some momentum to the downside. So maybe just correcting. I know the trend's up in gold, but you can't fight the signals if things change. Let's put up GLD though. That's the ETF for gold, since most people tend to track that. So yeah, okay. So you got a negative VR. You actually had a key reversal day yesterday to the downside, and then you got the negative VR. So again, indicating a top in gold here, trading top anyway. You got a gap here, a little gap there, and stochastic down. So yeah, I'm gonna keep my bear hedge on the gold for now. Let's see what's going on with crude oil. Um, I've been bearish on crude oil, and I was calling for a move down to 55, maybe even the mid 40s on crude oil, and we got short. And the way we played it was short USO, excuse me, or long SCO, which is the way I like to trade because it's cheaper. So SCO is the way of inverse, double inverse USO. And you can see when we got the negative VR in USO down, the positive VR came in and SCO up. Looks like it's going up again, which means crude oil going down, stochastic up. And let's see if we get volume. Let's see, we had 101,106 yesterday. It looks like we're gonna get in. We're short. I'm just checking the volume here. We need to do over yesterday's volume, over 110 to 105. So looks like we're gonna get a positive VR today. We still have another couple hours, a little less than a couple hours of trading, which would help confirm the downtrend in crude oil. Let's see. I'm just trying to think some hot names out there. Um, let's see, Newsmax. I'm gonna put Newsmax. Those of you who may have been involved or traded this, I don't know if you would know what happened. It went public a couple of weeks ago. I think it opened like $12, $15 a share. It ran up to 200 and what, $60 the same day, the very next day. We traded it, actually made about 25 points in it on the way up. I wasn't smart enough to stay all the way to 250. So anyway, it's come way down now. There's some lawsuits against it and so forth, but starting to show some accumulation. So this could be another meme stock, so to speak, but potentially a lot of volatility. So keep an eye on it. We don't have a position in it right now, but this thing could easily, run back to 30s, 40s, 50s and be a nice tradable stock. So it is down a little bit today. It was up earlier, and let's see what's doing on the intraday 5-minute chart. And this gives me a chance to show you some of the short-term time frames. Excuse me. Just a 5-minute chart of Newsmax. You can actually see how little positive VRs or negative VRs actually show in any time frame, which I didn't show you in the previous example. So we can put up 30-minute chart, daily chart, weekly, monthly chart to see if we're getting positive or negative VRs in it. Time frame is not long enough for weekly charts yet, but I've been watching Newsmax for another trade since we had a pretty good trade, a couple of weeks ago when it went public. Another stock which is hitting our list here is Piedmont Lithium. Very nice move here, positive VR actually about 10 days ago, and it's been trending up here, rising stochastic. This is in the lithium industry. You pull up a weekly chart, it's way down from its highs. pull it up here. Way back, it's all way back. Gee, you go way back to 2023. It was $65 a share. So we go
Hey,
way
Mark,
back there.
could I ask you to
Go
pull
ahead.
up SOXS? It's an inverse semiconductor.
Okay,
SOXS.
sure.
Yeah,
SOXS, right?
right. Mhm.
There you go. Yeah, this is great. We got to do more live charts. Let's put the daily chart up.
For like the last 4 or 5 months.
Oh, this is daily. Of course, you had your negative VR, and we had the sell up. It's just going in. It's sideways here. It's the the uh, the orange lines indicate it's trading inside. It's an inside range.
Mm,
It has to
right.
break out of this range for me to get a sense of it. Let's put up on the weekly since you asked, Ken. Go ahead.
Yeah, sure.
Sure.
Yeah. Thanks. Be
Okay.
interested to get your
So
take
it's,
on that.
yeah,
Another
well, it's
one
all
is
compressed. It's compressed here because of the
mm,
scale.
okay.
The weekly charts are still in a downtrend here, but getting
Mm,
oversold. So I don't have any clear signal on the weekly, and the daily. Of course, we just showed you had the big
mm,
drop. I got to change the scale here, blow it up here a little bit.
yeah.
But what's interesting is when it was moving up, and this is from February on, we had some nice positive VRs indicating the uptrend. Positive VR, and then you got a key reversal off the top, and then the
Mm,
negative VR. So there was some good correlation in terms of keeping you in the stock, and I guess you would have, or the index, you would have reversed that, and on this key
right, right.
reversal day. So
Yeah.
yeah, it had some good correlation here. There's another one you want me to pull up since you're mentioning that.
Yeah, sure. Yeah, yeah, appreciate it because you know your stuff. It's really good. And by the way, I've used what you taught for my whole career, the 25 years. For example, I look for volume after something sells off and starts to bounce. I look for higher volume on the buy side, and I use that to help determine how many shares to trade. So, the other chart
Sure.
is UVIX, UVIX. It's a volatility
U
leveraged
UBIS.
X. Yeah.
Oh, X. I'm sorry. Okay, this is the VIX, long VIX.
Right,
I
right.
like it.
I
All
love this
right.
thing. Yeah.
Well, you got some nice correlation on the VR.
Mm-hmm.
Negative VR comes down for 2 or 3 days, positive VR for 2 or 3 days, positive VR for another 2 or 3 days. And there's a big mess here with the key reversal. So
Mm-hmm.
it's hard for me to get a gauge on it. But going back 4 or 5 days here, we had a positive VR and it did trend up a little bit for the day
Hmm.
or two. So there's some good, trading correlation here on the yeah, I can put a weekly chart up. I don't know if that's going to do us any good, but no, it's too compressed because it's been trading in too tight of a range. We got to look at the daily. So,
What you teach, it works. It's good. It highlights perfect places to get in. So, yeah.
but it gives you another tool, and that's what VR is for me. And I'm
Yeah.
sort of prejudiced because I don't look at a lot of stuff, and I just focus on a handful of stocks or indexes. But
Mm-hmm.
if I do get a VR, that tells me I have a buy signal and I know where my stop is. And of course, I'm watching a lot of other things, but it keeps my life simple because it focuses me on a key indicator, and it usually
Yeah.
is a pretty honest one.
That's
I'm just
smart,
trying to
man.
think of I'm just trying to think of other names that you want to pull up. We only have about 5 minutes left, so tell me what you. I had a bunch of names and they were on my other list, but we're not seeing them on the screen. So it just stuff that I thought the audience would be interested in seeing. Let's put up like Nvidia, since everybody likes to talk about
Yeah.
Nvidia, right?
NVIDIA and
Um,
Tesla, yeah, too.
yeah, we did Tesla already.
Yeah.
No clear signals here except negative VRs. We saw back in mid-March, negative VR, and it trended down. Then we had a key reversal, but that may have been a positive VR, but if you fudge it in terms of lower low, higher high, and increasing volume, but I didn't get a clear VR signal here, so that's not as clear. But you can see looking at the chart, there's some pretty good, correlation. There's some pretty good correlation on the VRs of going up and negative VR going down. So it gives you a good sense of where the money flow was in the stock. Let's see. Let's see what else is going on out there today. I know Disney.
Or maybe you could tell about a special offer, anything you might want to offer to them because hey, your teaching's really good. It helps. So
Yeah, yeah, okay, sure. If you don't mind, yeah, I have half off, 50% off in any of the newsletters. And the code is half off. Just go to vrtrader.com and just punch in the promo code section, the phrase half off, and you get 50% off.
what would you
Um,
recommend they start with on your site? What would be a good starter course for those who are new to you?
Yeah, the platinum letter, which is the
Hmm.
main, the big main letter that I have, it covers. I try to cover everything in there. Everything from
Hmm.
Bitcoin to gold and everything. So even though we have segmented letters. You know, speaking of Bitcoin, let's put up GBTC here, see what that's
Yeah.
called. All right, so nice little positive VR in Bitcoin Trust. This is today, yesterday, day before. So you're long here.
Mhm.
Actually, you've been long on the positive VR. Between
Mm.
you and me, when I see 2 or 3 days move in the direction, I tend to want to take profits.
Right, right.
So I, more than likely, I'd be looking to take a profit. I'm not saying I'm not bullish on Bitcoin or it can't go much higher, but after a 2 or 3 day move after positive VR and as a trader, I'd be happy to ring the register and just see where it is tomorrow. So, but we
That's
did
very
get a nice
smart,
little,
man.
nice little signal there.
Yeah.
Um, IBIT is the other one I think I mentioned to you on the other screen. That's the BlackRock, Larry Fink, uh, Bitcoin Trust. Now here we did not get a positive VR, even though Bitcoin Trust did. So one in the same, they both mirror each other. So it's interesting that we didn't get it here, but did trend up. So I generally check both if I'm trading anyway. So I'm just curious to just put up the IBIT and see what else going on there.
Another good
Uh,
Bitcoin play is Mara, MARA. That's a really good Bitcoin play. It's
Yeah,
all
that's
spiking.
I'm in Mar. I mentioned it earlier. I love
Oh,
it. Got a positive VR. Today's the
yeah.
third day up.
Mm,
CLSK is the other one.
mm,
They're cheap ways of playing it because I believe they're the miners for the Bitcoin. So that's
right.
your CLSK moving up. Um, and they're both very cheap compared to where they've been.
Yeah.
So anyway, bottom line for me is my cycle work is indicating bottom in the late April, May time frame. I know it's real volatile with the news stories back and forth every day, but we did get a little positive VR in the Dow here. So I'm leaning a little more bullish here. And obviously, we know where our stops are. So that's sort of where I'm at in terms of my strategy. But I would say overall, I'm bullish for the year. And if we do get another shakeout into May, it would be just another buying opportunity. And take a look at all those cryptos, particularly if they get another shakeout in the weeks or months ahead. I think next year and a half, this could be, great opportunity here. I think Bitcoin easily going to make new highs, and some of the lower, cheaper pricer cryptos out there like XRP and so forth, I think could do really well. Just as a side note, there's about 10 or 12 ETFs now registered for XRP, and XRP only trades around $2 $2 for the crypto. So there's going to be a lot of potential buying coming into XRP once all these ETFs are approved for it, I believe. So you should take a look at XRP and obviously the ETF when it comes out.
Mm.
Ken, I think we ran out of time.
I think you did a
Right?
great presentation, sir. So thanks. And I agree with you. Yeah, we're getting rotation out of equities and into other asset categories. I like gold and Bitcoin. Yeah. So great presentation. Yeah.
Well, I'm sorry for the technical problem there on the screen. So from now on, I'll just put up the live chart and be done with it. That's the best way
Oh,
to go, I think,
yeah. Yeah. I think it's great. And you did an outstanding presentation. I really enjoyed your comments. And I
Thank
think
you.
some of the, yeah.
Thanks for inviting me. And I apologize. I'm a little hoarse. I'm getting over.
Yeah. I know
I'm drinking my hot water and lemon as I'm talking to you.
yeah. Oh, good job. Well, thanks so much, Mark Leibovich. I appreciate it.
Take care. Thanks a lot. Thanks. See you next visit. Have a good day. Stay healthy.
You too. Stay healthy. All right. Well, next up is a longtime colleague, Price Headley. Price, are you with us?
Click that audio off. How you doing, Ken?
Hey, doing great. How about yourself?
Fantastic. Thank you for having me.
It's been a long time since we had that lunch at the juniors
Out in
in New York.
Vegas, right?
Yeah,
Or
yeah.
New York
New York,
and
yeah.
Vegas, exactly.
Yeah, well, great to have you here, man. It's
Great to join.
yeah, well, Traders Price Healy is one of the best people out there in the whole industry. He's always gets packed rooms at the money show events, and it's a real honor to have you here. So, thanks, Price. Let me let you take it away.
Oh, thank you,
Begin
Ken.
now.
Let me make sure I'm share my screen 1 second, and got the 4 screens set up here. So let's share the right one. Let's make sure that's coming on. We're going to talk low price options. Can you see that okay, Ken?
Yeah, yeah, that's good.
Oh, perfect. Well, I'll get rolling. Thanks again, Ken, for having me. It's such a pleasure to be with you all. The markets, it's obviously, been such an unprecedented time in terms of news flow, right? I mean, you've got every day being a new day, and that's made a lot of traders sit on their hands. We think it's really an ideal environment for finding relatively cheap options. The low price options can give you a lot of bang for your buck. We're looking
Mhm.
for trades that can double, triple, even quadruple in a matter of days. They're not all going to do that. Let's keep that in mind. Let's keep in mind too that we're going to have losers. We're going to talk today about how we manage winners and losers with this methodology. And as I get it rolling, just a quick reminder, everything I share with you in today's presentation is based on our proprietary research. It's intended for illustrative purposes only and should not be considered specific advice or recommendations, of course. As you know, stock and options trading, they've got large potential rewards. We all know they've got large potential risks too, right? We're going to talk about both sides of the coin. How do you manage both? And we do it a little differently on our exit rules versus our entry. We're going to walk you through that. Past performance doesn't guarantee the future, of course. Do see our terms of use on our bigtrends.com homepage. Now, this is a $1 or less option strategy. Now, you still have to multiply that times 100, meaning you're going to control 100 shares of stock. It's going to cost you no more than $100, sometimes as little as maybe $50. We're going to get into the relatively cheapies, price between 50 cents and $1, and that's where you get the leverage. But it can't be any old cheap option, right? So you got to get indicators and things firing together. We like not one technique, but actually two different indicators. When we get them both breaking out together, we call it double confirmation. It's like two rivers flowing into one more powerful river. That's the kind of power you need, and especially if you're buying options in the relative cheapies, you got to get strong trend movement. And so we're going to give you a bunch of chart examples, case studies, what works, how do you get $1 turning into $2, $3, and $4, up to 4 times your money with these monthly options. These are not the 0 day to expiration. We want to give ourselves enough runway. If you don't know me, I've been trading options, like Ken said, a long time, over 35 years. Founded bigtrends.com more than 25 years ago. It's always been about quantitative edge. You've got to have a systematic advantage and know that you're executing that advantage over time to take that edge out, knowing that, hey, no one trade's going to make or break you. You're going to have losing trades. It's about letting those stack up when you have an edge. If you don't have an edge, you should get the heck out and wait until you do have an edge. So let's share with you what's worked for me with a recent winning trade example. With the market drop, the reality that people forget is that if you're a money manager, if you're an institutional, whether it's a mutual fund or other, multi-billion-dollar fund manager, you don't have the flexibility usually to go from 100% invested in stocks to 100% cash. Usually you've got to rotate into something. And that's the name of the game now. It's rotation. Rotation is going to be the secret of your trading success, I believe, for quite a while going forward. You can't just buy the Mag 7 and hope that they're going to go up anymore. And so the reality is that, okay, what did the money rotate into when the rest of the market was starting to get trashed earlier this past month? Is waste management. Of course, you talk about essential services, right? Waste management at the top of the list. WM's a symbol, and for us, our signal was given at the first. This is an hourly chart, so every 60-minute close, we look for the first hour closed bar to tell us, in this candle up in this case, we're getting in actually right after this breakout here, because both of our techniques we're going to talk about here, the red line is the Larry Williams %R, percent range indicator. Now, I jokingly change it from calling it %R to %T, because when you see it go into a trend mode, it will stay in these nice overbought phases. And of course, this first little signal we got, we had to endure a little fake out. The other one, though, and we'll talk about how we endure that. The other one is CCI, the Commodity Channel Index. Likewise, we don't just trade it for commodities, we trade it for big name stocks that are starting to trend. So when you get both of these moving together for you at the same breakout point here, we say, okay, give it till the next afternoon and buy the monthly option. So this was a signal that hit back on, you can see here, this is back into basically right around springtime here. And you see right near the end of March, but basically you can see that we're getting in and we're wrong initially. You notice this happens sometimes. Okay. You can't judge a trade by one candle, one bar. You've got to look at it as a pattern of what works and what doesn't. For us, the pattern is if you buy a breakout and then it pauses or even slightly goes against you, you say, okay, I don't want to get faked out. I want to make sure I give it a chance to do what it looked like it had the opportunity to do. And for us, the rule is wait till the next afternoon after you got in one morning. Wait till the next afternoon. You say, oh, by then it could have completely reversed. You got to give yourself that wiggle room, and especially in today's markets with the news flow, to not get yourself faked out by a little intraday noise. So we're thinking multi-day. This is a swing trading approach. We're not trying to make day trading profits or losses here. Okay, so the bottom line is that you don't have to sweat day trades with this system. Notice what we paid for these options. This stock was, by the way, trading at $232 or so. So 100 shares would cost you over 23 grand. We recommended to buy the April 240 strike calls out to the third week of April, and you can see here we paid just 65 cents. $65 per contract controls over 23 grand worth of stock. So when you're buying, say, $1,000 worth, that would get you in the neighborhood of about 15 or more contracts, 15 or 16 contracts. And now you're saying, okay, what's our goals here? Well, notice, by the way, by that next afternoon, it snapped back up. We didn't get faked out. And by the following afternoon, we're above where we got in. So this is day 2. We'll put a 2 on that, versus 1 being where we got in. And at the end of day 2, we're well above where we got in. So that's our rule, is that we want to see that the stock is above where we got in by the end of day 2, end of day 3, et cetera, to not get faked out of otherwise good trades. Our first goal from a target perspective is, guess what? The magical target of 100%. You want to sell half your position whenever you can double, in my book, any asset. Okay, if I double anything, stock, Bitcoin, futures, Forex, or of course these stock options, then basically I want to sell half my capital to double. Why? It gets you to a risk-free position. You get your original risk capital back. Put 1,000 in, it's now gone to 2,000. Take that original 1,000 of all your risk money back into the safety of cash. That will free you up, not just financially, but psychologically, to give you the staying power to be around for potentially much bigger things. And they're not all going to fire. So if it does give some back, you're glad you booked half at a double. If it does keep going, I'm glad I still got half of it on, right? So our next target is a triple, a 200% gain. You see, as it starts to rip here about the 4th day into the trade here, you see it's gone up from about 232 on this hourly bar. It got real volatile when that was right post Trump's tariff announcement, and that's literally that next morning, April 3rd, after he'd done that Rose Garden table of all the tariffs being much bigger than expected, and everything else it seems like is selling off. And yet, why is waste management going up? Because the money has to rotate somewhere, right? It's gotta find the safe havens, right? And that's what you've seen, a lot of defensive safe haven buying through some of this tariff uncertainty. And so notice what the stock does intra hour there on that morning, it goes up to about 239. So not only are we getting our next target hit up here at 223%, we're shooting for 300%. It gets up just underneath that, and then it starts to come back down. Our trailing stop we do put a price stop in to protect profits. Okay, so once we get to a certain point on profit levels, we will start raising a trailing price stop to not give up too much of that profit. Our last piece did not get to our 300% 4-bagger objective. It got to only 184%. Okay, overall, on $1,000 maximum investment, generate $1,460 in gross profit before commissions. Remember, commissions are $1 or less per side with no ticket charges anymore. So it's a great time to be an options trader. But remember what I talk about the key theme that I want you walking away from my presentation today. Again, it's fast paced. We've got tons more resources at bigtrends.com. But the idea is great trends will stay overbought. They will stay in those broken out top 20% of readings for percent R, the above that plus 100 level for CCI. You think that shouldn't be happening, but yet when it does happen, those are exactly the names you want to keep riding at least a piece of. And we are gradually booking profits, taking risk capital off the table, yet still seeking to keep riding for the triples and quadruples when we get them. How do we find those trades? We scan for these on an ongoing hourly chart basis. We use the CCI and percent R customized settings. We're not using the off-the-shelf settings you're going to see on most platforms. So when you get signed up, we've got a great trial special for you at the end of my quick presentation here. Basically, you get the specific settings that you should use based on all my testing and all my real-world trading over many years and many kinds of markets. So, of course, a true Grand Slam trade is one that clears all the bases, right? Like in baseball, you one swing of the bat with the bases loaded, hit the home run, and you score 4 quick runs at once. Same concept. One Grand Slam trade can really make not just your day, but your week, your month, sometimes your year. The bottom line is that here's one that, again, didn't get to its final target, but still nicely profitable. This is one on Lam Research, LRCX. So Lam Research, you will see a lot of these where the first hour close, we're not buying at the low, right? We're buying after what we believe is the takeoff point. The rocket ship starting to launch based on both our indicators. Now you can see here the CCI in blue in the middle here breaking out and the percent R on the bottom. Just flip those around, but same principle is that, guess what? Even when it takes a pause, these good trends after a little rally, it should pretty much just flag out and then keep going, right? Take that pause, it refreshes, then rally. Next morning, from a Tuesday morning to a Wednesday morning, it's popping on up. Notice our entry was about $85. Okay, so we bought the 95 strike calls. This is something that even I had to grapple with when I was first getting into teaching big trends traders about. I say, do I think it's worth the risk to buy a 10-point out of the money option? Well, here's the key. you don't have to hold it to the expiration, right? If you held it to expiration, yes, you've got to be above 95 for that option to have value. That's at the end of the March expiration. This was being bought about a month before the expiration. So as it pops up right here at the beginning of day 2 and snaps up to about 89 to 90, we're still 5 points out or 6 points out of the money, and yet we're doubling our money. We paid 83 cents back in the mid 80s, 83 bucks a contract. We're selling half of those at that 100% gain at $1.66, $166 per contract. So we're selling half our contracts out at the double. Now you got a free trade. Notice the following day we get one more gap up, but of course we don't get to our 200% profit on that little a bit incremental high. 91.72 is a high. We never get to in the money, and then it starts, you can see, rolling over. So and what happens is our trailing stop gets triggered at plus 18% on the second half. You say, oh man, I hate giving up 100% back to 18. Well, average those two halves out, and you're talking about a 59% gain for the whole trade in about a week, right, or less than a week. So the idea of this is that from a Tuesday to a Friday, you're basically looking at good risk management, good way to give it a chance. Yet if it doesn't go, you protect capital, you overall book a healthy enough gain for 4 days work, and you move on to the next one. Let's talk about a trade that didn't work. Okay, I'm not just going to talk winners. Let's talk what a loser would look like. This is actually a put trade that we did. You can see here on Starbucks, we're betting that Starbucks was going to break down, right? The market looked like it was breaking down. Obviously, in retrospect here, with this pretty fresh chart example, our system said, you can see here, yesterday afternoon, we were betting on the downside, right? This is usually both these breaking down together, pretty good bearish signal here. It tries to go, then the market starts to reverse, and of course, it's market dependent. Starbucks starts kicking back up. We had the 65 strike puts, bought them for 80 cents, 80 bucks a contract. Stock trading in the neighborhood of about 78.5 or just under 79, right? So we're going to have to buy them a little bit out of the money, and that's okay. That doesn't bother me. But what bothers me is when we see things starting to reverse. And then, of course, by the end of day 2 in the trade here, we are above where we got in. We're back to about 81.5. So we're wrong 2.5 points. And yeah, it's a little worse. Usually I expect about a 20 or 25% loss. That one was a 45% loss. Here is one of the secrets of managing the volatility. Don't get too high or too low in any one trade in terms of your capital allocation. Be slow and steady in your capital allocation. That will win the race over the long term. In my now 35 years plus of options trading, it's all about staying in the game by not getting too high or too low on any one idea. No, nothing should ever make you or break you on one idea. It's about extracting an edge over a long time. If you're trading in terms of all in Texas Hold'em style, trying to go all in on a trade, you're just begging to set yourself up to wipe out. Eventually, you might be right once, twice, 3 times in a row. That can happen. But if you trade that way, that's reckless. That will catch up to you. So don't be foolhardy. Be sensible. Stick with slow, steady allocations. That's how you extract your edge over time. Some more trade examples that did get all 3 of their targets. You'll notice these patterns. Here's one with Dick's Sporting Goods, DKS, right? And you see this was back here in January when both of them break out together. Red line's percent R, remember, blue line CCI, both of them break out on this gap up right here. And again, the first day, we're not really getting rewarded. We're waiting. We're in a flag pattern. We're pausing. I've learned, though, that you don't want to wait for a retracement necessarily to get in, because by that point, either the trend is broken or else you've left the opportunity to catch the true rocket ships behind if you're waiting for a retracement. So get on as we get to takeoff point and then give it a chance to keep riding. Notice, what's the winning profile? Staying overbought. Percent R's turned into percent T, percent trend. CCI is staying overbought. No retracements essentially, and we're just launching steadily up. You can see a couple days later, we've popped from about 232 up to about 240, right? That's not a huge move. That's a couple percent move, and that's good for 100%. And then you can see up to about 245, it's good for 200%. And then our final target hit up here just past 250, maybe 252. Guess what? We were out of the money the whole way. We still have the 260 calls. They're just getting more and more valuable because you're going from 85 bucks to control 100 shares. That would cost you over $23,000 for, you're controlling that for less than 100 bucks per contract, right? And the idea is that, hey, look, as it goes from more like 10% out of the money, maybe even 14% out of the money. Now it's just a couple percent out of the money, and now you're at a 300% gain, $1,500+ in profit. And you're just saying, okay, look, it's about giving those big trends a chance to truly run. And yet, how much time did it take? it took a matter of about, you can see from the 21st to the morning of the 24th, officially 4 trading days in the trade, right? So the idea is that when they go, they should go quickly. They should get going. And that's the nice thing about that. You get that speed that's backing you up. You can see GE Aerospace, this symbol is now called. They split themselves up into some pieces there, right? But you can see same kind of thing happens. We get both of these breaking out together here in this first hours, big surge. We're getting at the start of that second hour. We send out real-time emails, and you can get them as text alerts to your smartphone too. I recommend both. This one actually does have a little what I call a retest right into here, which actually does hold that little low, but we're waiting. We're just waiting for things to get going. It starts to rally. You can see it goes through another little retest phase as it settles down a couple days later, but we're still well above where we got in here. So we're still giving it a chance to keep running. Here's where we get our first target up there. About 4 days later, you can see the stock has run from about 175 zone. Now here we are about 185. It's run about 10 points, right? We have the well out of the money 210 calls. Why are they so expensive? Because there's an earnings report coming a little over a week later, right? From our entry. So the idea is that if we can't get to double ahead of earnings, I will just close the whole position down pre-earnings. I don't want the earnings gap risk. But guess what? If you get your free trade set up where you sell half of it at a double, now you have no risk capital. Those trades are typically worth free rolling into earnings, giving it a chance to truly take advantage of the gap potential in your favor with no risk. If it gaps against you and the other half of your position goes to nothing, you still are at a break even at worst case, right? But if you look at once you sold half at a double, but you look at in this case, the next target when it gaps up, it finished the day before about 188. It opens the next day about 200, trades to 205 in that first hour on a good earnings report, right? It goes 301%. By the time we're getting our final alert out, take the final profit, now we've hit 300%. We actually get filled even higher at 542%. That's because we bought a relative cheapie, right? We bought an option at 63 bucks a contract when the stock was trading at the equivalent of about 17 and a half grand on that 100 shares. That one contract controlling that 17 and a half grand for 63 bucks. So that trade generated an outsized 2,290 bucks on $1,000 or per thousand invested, right? You can do it with more, you can do it with less. I just recommend if you're going with less, you start with 4 contracts as your goal at a minimum. So that way you can sell 2, then 1, then 1 to get all the objectives when we're hitting all those. What about Palantir? You can see Palantir back in December. You don't have to catch every leg of the Palantir move, and yet we caught this move here. And again, the key was that the time stop kept us in this trade. There's our breakout. You see it's trying to go, then it kind of fades, kind of going to this back and fill. That next day, midday, we're actually just underneath where we got in. You're saying, oh, are we going to get stopped out? Well, by the end of the day, look what's happened. It's rallied back up here. And we say, okay, give it one more day. We're hanging right around where we got in. And then you see it keeps on going up that next day. So we're now positive by day 3. Morning of day 4, we are now getting our first target objective there at the 100%. Then the 200% is over here a little later, that day 4 in the trade. And then on day 5 in that morning here, we're getting more than 300%. That's where we're getting 366% and saying, thanks very much, booking it that morning, and glad we did as it reversed then afterwards back down. That's why I don't just try to keep riding and riding, because eventually you're going to get reversals on these momentum names. We just want to kind of gradually take money out while this works. What happens when you stack all the trades, win, lose, and draw together? And again, this is past performance, right? Past performance never guarantees future results. We're just looking backwards. But this is one of my longer term systems that's been around on the Grand Slam options portfolio and my Grand Slam Extra, which we added to give additional trades since Grand Slam options is actually sold out due to its popularity. But this whole Grand Slam strategy, you can see since the beginning of 2017 through today on all closed trades, including that loser I just showed you on Starbucks, right? We're looking at every trade, win, lose, and draw. $5,000 account grew to over 35,000 gross before commissions, before subscription investment. That's basically a 7-bagger, right? 605% gross return. The beauty of this is that we are not trying to show it at its absolute peak. We're actually saying, you know what? We're not compounding it. We're going to use just a fixed $1,000 a trade. The nice thing about a fixed dollar amount per trade, instead of trying to compound your amount invested per trade as it grows, is that if you're compounding it, you get a drawdown, you're actually going to give back your profits even faster when you're compounding your amount invested per trade. This is going to help you to be more stable. Just use a fixed dollar amount per trade through the variable ups and downs, and hopefully you get more ups and downs over the long haul. Obviously, I'm confident in the system, and I want you to actually experience it. Don't just take my word for it. So what I did is I told my team, hey, let's drop this down here for this success summit here and say, you know what, let's take 3 months, not just a month to try it out. Give it 3 months and make it really attractive on the price point for you. So that way you can have time to gain confidence to see how both winners and losers work with these real-time trade alerts and the Grand Slam extra service here. The only one of our Grand Slam programs that's actually open to the public right now. Well, 3 months of trade alerts, if you were taking it off my website, we'll show you here in a second. It would cost you something like $891, right? Because it's $297 a month times 3, just under 900 bucks, right? But I'm going to slash that for you. Plus, you're still going to get the same access that my longer term subscribers have to the settings and rules. So you can plug in the settings at home and you can follow right along with each trade. Plus, with weekly video training from me, with the dedicated email access to me and my fellow research analysts here at Big Trends, you can ask any question you want and we'll help teach you so you learn this method while you're earning with it. So instead of paying $891, I said, let's slash that. Let's say, you know what, 3 months access. We know one trade on $1,000 invest could easily generate, $1,000, $1,500, $2,000 worth of profit potential, depending on how much they get to their targets. But the idea is that, hey, try it for 3 months. That's the next 90 days access for just 177 bucks. So what we did is we said, look, okay, that's a page that we set up that's just dedicated to today's summit. And it's based on success, right? members.bigtrends.com/success. This is when you become a member, you actually have that members.bigtrends.com access. You get a unique login where you've got all kinds of training tools at your disposal. So you got past weekly videos I've taught about what worked, what didn't, what's happening, we think, next in the markets, and more importantly, getting you set up for success in terms of a consistent plan that you can follow. Really, your biggest goal should be to have a system that you believe in, that you can execute, that you can take the signals and execute consistently. Most traders are not consistent in their execution, and that gets them in trouble. And you say, why do the majority of traders not do better? Because the idea is that they're jumping around. They're not getting focused on just consistently executing one system, whether it's a winner, whether it's a loser, whether it's a break even. It's like follow the rules of a system. I think you'll find this makes your life a lot easier by just following one simple in and out method. And we never leave you hanging. We give you alerts from the beginning to the very end of every trade that we call out. So over 3 months, you're talking about 90 days access. That works out to less than $2 a day. Some of the common questions we get about our Grand Slam program is they're saying, okay, so what type of option strategy we're using? Is it complicated? No, it's about as simple as it gets. We're just buying options, whether we're buying a call or buying a put. They're typically going to be out of the money options, right? So we might be 10% out of money on the more volatile names. We showed you Palantir earlier. It might be 20% or more out of the money. But the key is it's about getting that trend movement in your favor where we get enough speed of movement. I always say when I buy options, I have a need for speed, right? I've got to get things moving and moving quickly to make sure that I'm not getting that melting ice cube of time working against me. So we do no spreads, no naked sales or other kinds of options selling on the front end. It's just exiting what we got into. That's how we get out, is sell what we bought in the first place. We will never pay more than $1 a contract, meaning on each 100 shares you purchase, or your control, I should say, each 100 shares you control in one option contract never costs you more than $100 per contract purchase. So the idea here is that you should be getting into at least 4 of those, so that for the very basic starter level, that would mean you could start with as little as $400 per trade, and no, you wouldn't ever invest more than that. If you just want to kind of test it out, kick the tires, get comfortable with what winners look like, what stop outs look like, and how we manage both. We never leave you hanging.
Hey,
And then-
Price, I would say outstanding.
Yeah, Ken, what's happening?
Yeah, outstanding presentation, man. I'm clapping out loud here. 2 quickies for you. One is, I guess the most important one is, how do traders know when to exit? Because thousands of traders, they all hold on too dang long. I mean, almost 90 minutes. They all hang on too long. Those are experience. Everyone says, with you, how do they learn how to get out on time before it's a
Absolutely. I'm glad you asked, Ken. Thank you. The first part of that is, do you buy enough time in your options, right? A lot of people are playing with the weeklies or the ones that are about to expire, and they don't have enough runway, to use the Buffett analogy of, wants to have lots of runway. We want plenty of runway with our option trades. So we're buying about a month out to start. Okay. So when we buy about a month out, you're not worrying about, oh gosh, tomorrow's the expiration day. What do I do next? You're saying, okay, buy a month out. And then the next afternoon, if we get into the trade this morning, then we know the next afternoon, if the stock is trading at 90 and it's anywhere below 90 that next afternoon or any subsequent afternoon in that last hour of the trading day, we're like, fire the exit, get out. We're not
Yeah.
hanging on to slow boats. We only
yeah.
want speed boats, right? So
Yeah.
the idea is that it really forces your hand, and it basically gives you sort of like a window closing, right? The window
Mhm.
is tightening on your trade, right? And that
Right.
noose is tightening on those non-movers, but you're also
Mhm.
giving it the freedom to run when it is working, right? So most people do the exact opposite, as you know, Ken. It's
Yeah.
like we talk
Right.
to thousands of traders. I know
Yeah.
both of us do. And the
Uh-huh.
idea is that most people take those quick winners. They're like, hey, I can't go broke taking a profit. And then they hold their losers too
I
long
know.
and
It's like,
hoping it's going to turn around, right? So folks, you got to flip that. Don't be like most. Be the opposite of your instinct, which is to say, have a tight leash on your losing trades, your
mhm.
non-movers, get rid of them quickly. And then when it is working, gradually take money off the table, but leave something else on to get to that
Exactly.
next target objective. And
Right.
and that's what we find, Ken, is by taking half at a double on the winning side,
Mhm.
it's like, okay, sure, they may go to 200, 300%. And you might say, oh, I wish I'd held the whole thing. You can never play that woulda, coulda, shoulda game. You have to just say, look, we are gradually taking risk and money off the table, but also
Mhm.
giving ourselves more opportunity, because you know how it is. It's like when you're right, you tend to be right relatively quickly, and you tend to be right bigger than a lot of times than you might even expect. But when you're
Yeah. Right.
wrong, it's like you can't get out fast enough, right? So the
Right.
idea is
Yeah.
like, it's like, and the big other lesson, what Ken's asking about this, folks, is that do not ever add to a loser. Never,
Right.
ever, ever.
Ever.
Because
Ever.
that is throwing good capital after bad. It's based, because it's not just if that trade comes back, it's like, what else could you be doing with that money, right? So we're going to get you
Right.
6 to 8 new trades a month. We're going to have anywhere from a few days to no more than 2 weeks of held. Most of these trades are about a week or so holding, and then we're going to send them through real-time email, and we're going to also do the WhatsApp mobile phone alerts. We'll always give you the stop and targets. We'll always give you the exits. You're never left hanging. Remember just what one single trade can do for you, right? This was that recent one on waste management, and people think, oh, I should have just gone to cash in my portfolio when Trump's tariffs hit. Well, no, you can see. But instead, the money rotates into waste management. We get a piece of that breakout with our system not getting faked out in those next few bars. We're able to keep riding, generating over $1,400 in profit off of no more than $1,000 invested. And like you see, the history on this it's powerful. But the key is, I can't guarantee what the future holds. There's going to be ups, there's going to be downs. There's going to be times where we're right, times where we get stopped. But the idea is that if you're just gradually allocating capital, you can put it into a method that works for you. Then you're going to find, I think, that you're going to see tremendous value in this. Remember, $891 value yours today for just $177. When you go to that page, by the way, at members.bigtrends.com/success, you'll see the simple order page pop up, and then I'll hand it back to you, Ken. And we've already taken all the discounts for you. So basically, it's already pops up, and you don't have to do any other promo codes. We've already slashed it as low as it goes. Review the terms and conditions. You can pay on that page. You can scroll down. You'll see the way I like to pay for a lot of my stuff is through PayPal. And so it's all about keeping it really simple. You're saving $714. And think about that, for the next 90 days, next 3 months access, you're getting in for less than $2 a day. It's called Grand Slam Extra, and something you can put more home runs into your portfolio, folks, and know that we'll not be firing trades every day. We're going to pick our spots. So the idea is that we're dedicated to your trading success. So check that out at members.bigtrends.com/success. Thank you, Ken, so much for having me. It's such a pleasure to be with you and your audience and all the other fellow great traders out there today. It's a lot of fun.
Well, thank you so much, Price. You're a brilliant man, and you have a ton of knowledge, and everything you teach vets out, it checks out right, and you've got a very good professional approach that is missing out there from a lot of other people. And yeah, so you're one of the best out there. So thanks
You're
so much.
so
I know,
kind,
sir.
Ken.
Well,
Thank
yeah, it's
you.
true. I only speak the truth, and you're one of the best.
I
So
appreciate you. Thank you.
thanks for being
Keep
here.
up the great work, Ken.
Yeah, you too, man. All right, well, thanks. Take care, and thanks for being here.
You too.
All right, thanks, man. And traders, that's a great deal for less than the cost of the stuff, right? And Price is brilliant too. I mean, I've checked his stuff out at work, so good stuff. Well, we're at the near end of our presentation. It's been a good session, right? We've got a lot of good people. I want to thank all of our presenters and all of you. So we've got Norm Hallett up last but not least, and he's going to be here hopefully in a few minutes. He's not here yet. Price is still here. Let's shoot the shit. Let's see. So don't get out too soon. Oh, here's one I was going to ask. When I've checked out options, one of the things that I object to is some of the price points I want. If it's a month or two out of the money, the spread will kill you, right? And any tips of wisdom, you know better than I do, of course, this stuff. When you're looking for picking an option to trade, how do you minimize the cost of the spread? It's the high volume ones usually have thinner spreads, lower volume ones, which sometimes we want, maybe price it where there's too much of a spread, or to play with that overhead cost of the spread is too much of the unrealized delta in it. How do you manage that? I think price is down. Okay, well, there's one question I'd have. So just a tip to I'll be listening. When you look at the options table, do look for tight spreads. Oh, hey, Norm, you're here. Norm, where are you? In the room. No, use the link that's on the top of the America's Top Trader site. I'm seeing here. Norm, how do I get to here? Okay, I'm seeing. Been a long day. When will we get there? I do not see him there. No, can you log in to the link that's at the top of the site at America's Top Traders? I don't see here. Let me send you a invitation. I don't see it. Norm says he's in the third room. I don't know about the room. That's just the one. Well, let's figure this out. Let me use the link that Zoom sent. It should get you here. It's been a real honor to have so many smart people at Reddit. I pick up a lot of new tips, and the time just flies by, right? We have 8 speakers, right? It's really good amount of information from time. Copy link. What's that in chat? Wow. There you go. So where are you, Norm? I don't see any panels. There you go. Okay, I got you.
Do
Where did I
you?
just run? Oh, there you go.
Okay. All right. Yeah, I was in on that link before, but somehow you may not have seen me.
You're still not in the panelists list here. That's
You
odd.
know, I'm not a panelist yet.
Yeah, I try to promote you and see.
Okay.
I know I'm really good. It's worth listening to, folks. So stick around. We'll get this figured out.
Okay.
The panelists too, I have Price and South. Let me see this. So Norm, where are you at? I don't see here.
I'm not sure why, but
Can you use that link that I sent that's in the text?
I used the link that you sent and can't.
Let me see the link here. Hold on, folks. It's worth it. Technology is great when it works. Okay. Oh, okay. So Norm, I just emailed you the link and
Okay,
click on that.
I'm gonna leave and come back then. Okay.
Okay. Yeah. Thanks. And folks, yeah, Norman's really good. He's the best like psychology or trading person I know in the industry, and he's really good. This stuff really helps. So you think about Norman's stuff, what he teaches is not like basic, it's really like second level, ways to think about things and improve performance. I know, man. Oh, yeah, okay. Well, you to panelists and allow you to talk.
Just so they joined as a panelist. Hang on one second.
Yeah. I promoted into panelists and
You need perseverance to be a trader.
yeah. And they use this dang technology, right?
All right, I'm going to share my screen since we're going to get it going a couple of minutes.
Yeah, I can see your name, so that's good. I don't see in the. Oh, there you are. Okay, cool.
Can you see my screen?
Yeah, I'll make you a co-host. Elevate you higher. Level up. Right? Power up. Not yet. I just see your name. So click on the green share button and pick one of the,
Looking for the share button here.
it's green and it's
Hang on,
square
let's
green. It's,
share.
Hmm.
And here we go.
there you go. Okay, cool.
Okay, see, perseverance, Ken, that's what you and I,
Yeah.
that's what
Oh.
you're made of.
Yeah, no, it's like not how many times you get knocked down, it's how fast you get back up on your feet and go after it. So, well, great job. Hey, everybody, Norm Howell, it's a real honor to have you here. I've worked with Norm for decades, it seems like. He's the best trader coach out there for mental aspect. He also helps with prop trading in a new area. So take it away, Norman. Thanks for being here, man.
Thanks, Ken, and you know, anytime I can follow Price, it's an honor. Price and I, you know, he's
You
one
got
of
it.
one of the real good guys.
Yeah.
He's I remember
So are
I've
you.
known
So
him for at least 20 years, but
yeah.
options, Price is going to do a real good job for you. So if you're hesitating, don't hesitate to go with Price on options.
Right.
I ran one of the biggest option firms in the country back in the. I know guys that know options, and Price knows options. So
yeah.
all right, well, let's get into the basics of prop trading. I don't want to keep you more than the half hour as I've been assigned. So I'm going to go quickly here on this presentation. I'm not going to repeat myself, which I can do sometimes for emphasis. As my father said, my father used to say, don't put the emphasis on the wrong syllable. So may he rest in peace. So I'm going to say things once and hope that you can grab it as we move along in the next 25 minutes. I went to the University of Cincinnati. If you don't know who I am, I graduated with a math degree from UC. I did run that trading room. Actually, there were 63 professional traders that I was in charge of, option traders back in the 80s. And this was a picture of, it really looked a lot like this, only our computers weren't that big back in the early 80s. It was right past the time we had to look at tapes. But in any event, that taught me about trading plans and how to construct them in a professional way. When one of these gentlemen, or we had 3 women in the room out of 63 at the time, and when there was a problem with their performance for traders, for their clients, they were trading other people's money. And I would bring them into my room. Almost inevitably, the problem was a too complicated a trading plan, and too many hoops to jump, too much hesitation to take on a position, as opposed to the importance of getting in a position at the right environment and then managing it correctly. This is what I learned. I've written several books on it. And at that time, these large firms, large houses like Paine Webber were kind of buying some of the talent from other places. And that's what happened with me. I took an offer from Paine Webber. I spent a couple of years with them as a commodity trading advisor, but did not really like they were big years for me. We were actually earning I was earning 20% of the money that I made for clients. That was a pretty good time for me. The problem was there's a lot of selling involved, and I didn't like the selling to getting new clients and so on. I love the trading, but in any event, this is really what drew me recently to the idea of prop trading, where you're actually getting 90% of the money that you're trading. Now, of course, I was trading millions then, so 20% looked pretty good, but still, with these prop firms, especially like Top Step and Apex, some of the ones that have been around for a while, you can actually earn considerable money and be trading $1 million plus of their money. Here's one of the books that I've written, maybe wrote it 10 or 12 years ago. This was still on Amazon. Books have been written about me, believe it or not. I tend to jump up on the stage and get pretty animated because, as Ken mentioned, a lot of what I do is talk about the mental and emotional part of trading, which is really the missing piece for most people. Started the Disciplined Trader in 2020. For the sole purpose of helping traders with their mental and emotional capabilities. But we were making traders ice in the veins, disciplined to lousy trading plans. So I went back to my roots and recently formed Their Money or Profit, which is really an offer for the latest trading plan that I built expressly for the idea of prop trading. So let's get into what prop trading is. I'm not going to spend much time or any time on this slide, except for to say, if you want a copy of it, just email me at admin@thedisciplinedtrader. Just request this prop firm study, and it'll be sent to you. Whoever my assistant will receive this. My assistant's assistant will receive it, and you'll get a copy of this. This is a comparison I did of what I believe the top 7 prop trading firms at the time. It was a weighted measure. I'm going to show you a zoom in on kind of the winner of this, one of the 2 winners being Top Step and Apex. And but I put a lot of weight on how long have they been in business. I didn't want somebody, a firm that just started last week. How long have they been in business, and have they been paying out increasing millions in payouts? These firms are paying out millions a month to their successful traders, and as long as they were paying out more each month, that was an indication that this was a firm that was growing, and then of course existed for a long period of time. A long period of time in this business is a couple of years. In the prop trading study, maybe 2, 3, 4 years. In any event, I weighted it toward that. But if you want a copy of it, go ahead and email me there at admin@thedisciplinedtrader. Apex was one of the winners. We're going to focus on them right now because they're what I'm using primarily myself now, and as well as the numbers are a little bit more simple to follow. Let's take a look at a zoom in on that Apex. I won't go through all the columns except for the important ones. Let's concentrate on the $50,000 account. That's the first one that I think you should be testing for if you are going to do this. They say that the monthly monthly expense is $167. They're actually giving a 90% discount right now, so it's $16.70. They're usually giving 70 or 80, 90%. It's these yesterday until today and tomorrow. It's going to be somehow my timing is perfect here for you, $16.70. In any event, but let's take a look at what they're offering here and what monthly means. $50,000 account, you've got to build it to $53,000. Okay, once you do, once you close out an open position and your balance is at $53,000, you are then awarded an account for $50,000. So the evaluation stage is you need to make $3,000 closing your open trades, and you can't keep a trade overnight. So everything has to be closed out. This is a day trading adventure. Okay, so $16.70 is what you pay to open this $50,000 evaluation account. That's what it's called in the first stage. Once you build that account to $53,000, you're then awarded a funded account of $50,000. Now, if it takes you more than a month, you're going to be charged another $16.70 if it takes you more than a month to reach $53,000. In this particular case, they're actually charging you $16.70 the first month, and double this. It's 80% off for any month after that. But really, when you get good at this, you won't spend more than a week likely qualifying for a funded account. But the important part here, one of the important parts, is the trailing drawdown. And I want to just be clear on the trailing drawdown, just to take a moment here. If the $50,000, when you start out, if you drop to $47.5, you blow out the account and you've got to open a new account for whatever the price is at the time. As I say, it's usually 30, 40, 70, 80, 90% off. So you blow out at $2,500. And as you progress, when the $50,000 is at $51,000, that $2,500 trailing follows you. And it can also creep up on you if you give away open trade equity. What I mean by that is that if let's say you start on your first trade at $50,000 and you put on a position, and that position goes well right away, and you're up $1,000 open trade equity, meaning that now you have an open trade balance of $51,000. Well, you put a break-even stop in, and you let that market come all the way back down, stop you out at break-even. Now you're back to $50,000. Well, in your own account, you may say to yourself, well, yeah, I should have taken the 1,000. I was a fool. you know, should have done better, but that's okay. I still have all my money. Well, that's not what Apex thinks. And that's what that's not what Payne Weber would have thought if I did that as a commodity trading advisor. What they will do is hold that $1,000 against you. And now instead of $2,500 floor, now it's only a $1,500 floor. And if you go below 48.5 now, you're going to bust out. So, and you won't qualify. So this trailing stop is important to know, and the fact that open trade equity that you don't take works against you. Okay, and I'm going to show you a couple of suggestions if you happen to be trading right now. I want to just give you this. If you're an Apex trader right now, I've done some work with them, helping their traders on the mental part and some of the and the technical part, like we're talking about right now. If you and for that, this is a link that will always get you to Apex's best pricing at the time. Sometimes undisclosed to the public or to certain of their lists. So you'll always get their best pricing if you follow the disciplinetrader.com/Apex. So I wanted to give you that particular link if you're going to go with Apex. Let's look at the 3 phases of prop trading real fast. I've talked about the evaluation stage where you need to work on getting that 50,000 up to 53,000. Then you're funded. Now, when do you get paid when you're funded? Well, you got to build that new funded $50,000 account to 42.6. I won't go into why they're that number, but it's almost another 3,000, 2,600. Once you reach 52,600, you can actually start requesting money. And with Apex, you can take your money pretty much any time. Okay, won't go through the machinations of what that means, but generally, at least a few times a month you can. Okay, so funded phase, you've got to build that 50 to 52.6, and now if you still have that trailing 2,500. Now, if you build it to $60,000, that it doesn't follow you. It only follows you to 52.6. Once you've reached, say, 55,000, that red line is still at $50,000. Actually, it's 50,100. Don't ask me why, but it's 50,000. It doesn't follow you. So your trading becomes a lot freer as you expand your winnings. So yes, that follows you. That 2,500 follows you, and it's always in the background of your mind. But professional traders have that idea in their mind anyway. Listen. They want you to act and trade like a professional trader. Okay, that's not a lot to ask. And so those who complain about a trailing stop, I think are traders who really don't want to act as if they are a professional trader, because that really is what we do when it's not a red line, but we know that if we start backfilling and don't take our open trade equity, we know we're not going to be around as professional traders for very long, for a number of reasons, which I can go through again in another presentation. But valuation stage, you got to make it to 53. The $50,000 in the funded phase, you need to get to 52.6. Once you do that, you can start taking money out. Okay, and then there's a phase that I think is the most important phase, and that's the consistent income phase, where you can just take out money anytime you want. You don't have to trade every day. With Apex, you can stop trading for 6 months and come back to it in a funded account. Okay, so there are no fees after you enter the funded phase account. There's a small upfront fee of $100. Right now, it's $130 for any size account, whether you're trading or whether you're testing for a 50 or a 300. It's only $140 right now. One fee when you get started with the funded phase, and then there's never any other. Charges for you. They even give you the trading platform in the form of NinjaTrader, and if you don't already have it, and they'll also you can use other platforms if you want, but if you want a platform, they'll give it to you, and they'll give you the data feed. All of that is free to you. Okay, so consistent income phase is when you've expanded your winnings out to that 55, 60,000, where you can trade more freely and whatever. So let's go through the phases just a little more closely, and then I want to give you an offer for my trading plan that I have that I think you've never seen an offer like I'm going to show you. It's a trading plan that's built for what we're talking about. The evaluation stage, again, you got to get to 53,000. You got to watch that $2,500 red line. I like to put in a scalping element. In fact, I almost insist that you consider a scalping element, because a scalping element allows you to take money on the way up in a long trade. And by doing that, you're capturing money to keep your distance from. You're not giving away open trade equity in a scalp. Therefore, you're building your distance from the 2,500. Okay. So again, I mentioned how to open an account and some of those fees. If you bust out, you can reset that account right now for $40 or $50. Sometimes it's $35, but it's never quite know what it is. They change their offers almost on a monthly basis. So if you bust out, you can reset for, I think right now it's actually $50. So you know, you can be a little bit aggressive in the evaluation stage, but you really, if you're new to trading, you really want to learn the right way to trade in this phase. Okay, it's very inexpensive to test, so you may want to be aggressive to your more experienced traders. Again, once you pass, you have a choice of you're going to receive the funded account. You can make it 140 lifetime, which I've mentioned it's actually 135 right now for any size account, but for a 50 normally it's $140. No more fees are asked for you from then on in, no matter how long you trade. Or you can go to $80 a month if you want. Why you would do that? That would mean that you don't have a trust that you can be there for very long. So really 140 is the number that you're looking at. Okay, the only choice would be lifetime. Let's get into the funded phase. Okay, again, you've got to go from 50 to 52.6 before you can ask for money. Again, that $2,500 line is following you. I've explained that it doesn't follow you as you keep building. If you bust out, you have to revert to the evaluation stage again. So you really don't want to bust out of the funded phase. Okay, so you really want to trade more conservatively. You can withdraw as much in the first couple of months as 500 to 2,000. Once you show that once you have asked for money 2 months in a row, that limit comes off. You can build your account to 70,000. You can ask for 10,000. Doesn't matter. So be conservative, but be conservative with your withdrawal so you can do that building. Okay, you don't want to build to 53,000, 55,000 and take out 2,000. You want to take out 500 just to know that it's real. The first time I asked for $1,000 the first time, I called my bank and I said, is this money that was just wired into my account real? I didn't really believe that it was real, but it is. And once you feel that reality, that's when you're going to get very, very serious about that, because you can open as many as 20 of these $50,000 accounts. I won't go into why. I want you to start with just learning how to do this and then start withdrawing money. Then I'll show you how to increase that. Okay, so be conservative. Your primary goal is to build equity. You can withdraw at any time. A little bit about the consistent income phase. Again, if you withdraw 2 consecutive months, there's no limit to the amount that you can withdraw. The goal after no limit is achieved is to continue to build the account and keep the minimum withdrawals so that these $2,000 to $5,000 biweekly withdrawals can continue even through less successful trading periods or when you're on vacation. It's really a bank account waiting for you to withdraw from. Now, some people don't like to hold a lot of money. And I know that my wife does not like to hold more than a couple of $1,000s in a checking account. She'll go to the bank and pull out 1,000 or 2,000 and put it in 401k, whatever. The idea is that you may not want to keep a lot of money in there, but you got to keep a certain amount, because that's what they're judging you against. Okay, so build to 60 or 70,000 so that you can have plenty of room to withdraw. All right, we only have about 5 or 6 or 7 minutes. It started a little late and I'm the last person, so I may bleed just a couple of minutes. That's okay. This is what it looks like when you start passing. Once you start getting funded, this is one of the first ones that I did at $150,000 account. But I've done many of them. I've got 9 of them or 10 of them now. These certificates is what it looks like when you start withdrawing money. They kind of, they congratulate you, and it's kind of a cool thing. Okay, for passing the prop evaluation, getting funded and getting paid. Here's the loaded gun simple trading plan. The core loaded gun trading plan is really just 2 videos that are about an hour and a half total, and they show everything. This is a simple trading plan. Notice you haven't seen any charts. I'm going to show you a quick one very quickly, but I can't show you much because it is very simple. I want to give it away. I'm not giving it away. Others have paid for it, but you got to work the plan the proper way. That's where the training comes in. Okay, so the core loaded gun trading plan is just a couple of videos. In fact, all of the rules fit on one sheet of paper. Very simple. I have what I call nuances. Ken was informative enough to let you know that I'm really into the mental part. And there's two ways that you can help yourself mentally. You can do some meditations, you can do some deep breathing, and do things like that. Even take it with the right supplements to focus. I can help you with all of that. But in this particular offer, all the nuances are things that you can do structurally in the trading plan to fit who you are. For instance, if you're somebody who is impatient, has a problem with patience, there are certain things that you can do. Some of the simple things are to go to a shorter trading time frame. So go from 5 or 10 to a 2-minute time frame. I don't like the one for various reasons, but you'll expose more trades the lower time frame you are. Also, there are a number of other things that you can do. So there are a number of different nuances that I give you to fit the trading plan to who you are without ever increasing to any great extent the risk that you're taking. Okay, so there are 7 of these right now. I'm always testing more nuances. So that's what I want to impress on you. You'll never see nuances somewhere else. It's a key value to what I give to my traders. The monthly get-togethers, we every Wednesday, last Wednesday of the month, we get together. I give you any updates to the plan that we're looking at. We share experiences, and you get all the recordings. Right now, there's 30 recordings of past monthly. So we've been doing it for a few years now. So you can zoom in on those to refresh and really get some new ideas and share. And a lot of people have buddied up. The traders like partners. I've never done that except for a partner sitting next to me, say at Payne Weber. But the idea is that some people like to work together. Look, trading is a lonely business sometimes, and when you're working the same plan and you're succeeding together, that's going to be a really exciting thing. This is what the chart. This is a recent S&P chart, but you can see what a simple trading plan it is. It uses 1 or 2 moving averages. It's got the down on the bottom. You'll see the RSI that we don't use really to take a trade, to anticipate a trade, but we use it for position sizing, which is an important feature of what I like to teach. So you'll see how this is a simple, unfeathered chart. Okay, here's the #1 bonus. I got 3 of them for you. The first bonus is me helping you in the first 90 days I'm going to give you 90 days of unlimited private one-on-one Zoom coaching with me. Generally, most people only need only want 1 or 2 sessions. It's very, because you're getting email access to me too. But I want to meet you. I want to maybe suggest 1 or 2 of those nuances. I want to find out about your background. And if we need more meetings, you can do that. Sometimes I think for somebody, I like to make them accountable. So I say, make another meeting in 2 weeks, make another meeting in next week. So sometimes I kind of push you to make another meeting, but you have as many as you need to get this down. Again, it's a simple trading plan. But I want you to know this, that the 90 days that I'm talking about here starts with our first meeting. So if you have things to do this week or next week or this month, don't worry about it. Take advantage of this offer that I'm going to show you that I know you've never seen anything like it. And then I want you to go ahead and commit to it and purchase it. And then make your vacation. And then when you get back, when the first meeting that you book with me, that's what starts the 90-day clock. So I want to be clear on that. Okay, so don't let that stop you. The clock starts with our first meeting. So I want you to take advantage of what I'm going to show you. It's really an experimental offer. I want to be with you every step of the way. So 90 days of unlimited. I'm going to skip these testimonials. I've got many, many testimonials on the page I'm going to send you to. There are many video testimonials so you can read somebody's truthful face. I think you're going to be very impressed.
I'm very impressed. I can't believe you offered that. I mean, really, I would never do that in a million years. No way in hell, I would never offer unlimited access to, because there goes my life. But I salute you. I salute you for doing that, man. That is a fantastic deal. I mean, Norm said he really knows his shit, and he's really good. And to offer unlimited access, that's just, I can't believe you did that. I would do that. It's definitely a great deal.
It is a lot. I may go to group soon, but this may be one of the last. I've got another project that I've been putting my people in. They're going to be in the new beta group. That's for another discussion. But bonus #2, I want to set it all up for you. If you're new to this and you've never prop traded, it can be a little bit confusing with Apex and Top Step and others. They have more an advanced setup to get your NinjaTrader running and to get the data feed in. I've got a guy that I want to give you. I'm going to connect you with my young genius. His name is Brady. He's going to jump into your computer. He's going to set everything up for you. All you have to do is start trading. Okay. So here's Roger, who actually paid. This is a service that we have for $150. Roger paid for it, and he said he ended up feeling like he got a bargain. Brady jumped into his computer. So the idea here is that let him do the work for you, or so you can get trading. I don't want the technical part to stop you. So I want to give you this as a bonus. I'm going to set it all up for you. And the third bonus is a trading room that I haven't put together. Pat, who is one of our Loaded Gun traders. Loaded Gun is the name, of course, of the trading plan. And he runs a 5-day-a-week morning. He runs it in the morning for a few hours every morning from, I believe, 8 o'clock to 11 o'clock Eastern time. 3 of those days, Monday, Wednesday, Friday, I think he makes it for all traders of all levels. And Tuesday and Thursday, he runs it for more advanced traders where he can really speak the lingo. So that's open for you. I don't monitor this. A lot of traders that are in really like this room. So, you know, it's there for you. But a lot of people like rooms. I've never been a room fan myself, to tell you the truth. But these guys are hot on it, and my people like it, so I'm letting them do it. So again, we're all in this together in Loaded Gun. And here's my guarantee: I am so confident that you're following the Loaded Gun simple trading plan will result in you getting funded by your prop firm, so that you risk their money and not yours. Still receive 90% of the profit you generate. Just share your trading experience with me and follow the simple trading rules. If it didn't work for you, I will not only refund your purchase, but you spend some time, I'm going to add $500 to that. I have not been have to do this. Actually, I had one return, but you know, without the 500, because it was somebody whose wife got very sick, and it was only the right thing to do. But I've never had to exercise it. But I want you to have it. It's out there for you. I think you're going to see it's strong. So here's my offer to you: the Loaded Gun Simple Trading Plan. It's retailed and it's been purchased for $24.97. It does include this first bonus on that page, the 90 days. Okay, it does not include the other 2 bonuses: the setup bonus and the access to the trading room, if that's your choice. It's a total value of $56.47. But whenever I deal with Ken and I we've been not, you know, we don't fight the markets. We've been gliding with the markets. That's a much better description. Ken and I have been, you know, successful doing this for a long time. And so whenever I'm in his program here, I like to give the special deal, $14.97. But I'm going. This is the part that you've never seen before. I don't want $14.97 to start. All I would like you to commit to is half that. $745 now, and the other half from your profits on the honor system. I don't have the time to
Impressive.
I don't have the time to chase you. I'm never going to ask you. I'm never going to. It's never a topic, or it's never mentioned again. It's never mentioned at all, anywhere. But when you purchase, I want you to know that really, I'd like you to pay the full amount, the full discounted amount, but it's on the honor system, and I only want it from your profits. And you can do it any way you want. Make the first 10,000 and give me the 7%, or make the first 1,500 and give me half. Whatever it is that you feel comfortable with, it's on the honor system. So only $745 starts now, and then the other $245 or $745 on the honor system. Just need to go to theirmoneyyourprofit.com. You can see all the video and written testimonials. Use the coupon code HONOR. I'm going to stamp that in your mind. Okay. Again, I'm never going to ask for it, but it's something that's really worked. I'm really enjoying. You know, what happens is people want to. You know, you'll want to do this. You'll want to perform on the other half. Okay. So this is an experimental offer. It's really only good for today. Okay. I started this experimental offer about 2 months ago. It's really doing well. But I'm on a new project now, and you know, we have plenty of takers at full price. So, but I want those people who are on the edge, or thinking about doing it but not sure, don't want to spend another $2,000 on another trading plan that didn't work. Let's do it this way. Let me help you with 90 days of one-on-one. Let me cut it in half for you. do the honor system thing with me. Let's be honorable to each other and make this all happen. So that's my offer to you, Ken. I don't think you've ever seen, I've never seen
No, I was
anything.
gonna say, I've never seen such a good offer in my life. It's outstanding. I mean, certainly none of us who are well-known offer unlimited access because we're good and we're worth being paid a lot. And to be honest, in order to, they're worth at least $300 an hour. So I mean, you get your money back just from the access to them and money from profits made other half. That's brilliant. That's great, and it says a lot about you. So I enthusiastically recommend Norm Halliday. He's one of the good guys. He's been doing this forever, like me, and we're old dinosaurs, and we've seen it all. And have somebody like Norm accessible for even emails, I mean, back and forth, or chat text, or for unlimited. That's just wow. That's an offer that should have another zero on it. So it's a good job, Norm. I salute you. I personally would not do that. That's you're giving away too much. So, but I respect you
Well,
for
Ken,
that.
you're the only one that talks faster than me. So I appreciate that.
I hear that a lot, but Norm Allen's absolutely one of the best guys out there. He's a lot of depth and breadth, and he knows his stuff, and he's seen it all. So whatever you struggle with, I mean, if you can work with him and get live access to the guy for 3 months for that, I mean, that alone is worth it. So we're worth it. So
Well, I appreciate you having me, Ken. The thing about the one-on-one
it's
coaching
on it. I mean, yeah, it's like,
is that my experience is that the vast majority, 1 or 2 sessions, because it's a simple plan. And if you can spend an hour with somebody and really get into who they are, you can really match the friction points and
Right.
solve them right then and there. So,
Yeah.
I do have some that like to, I don't think they have any friends. They like to meet. They like to meet with
it's like me. It's like me. I mean,
every other week. But
Yeah.
listen, I love to. It's funny about that, and you probably know this, but just as much. The teacher learns more, learns as much as the student. It
Right.
reaffirms,
Right.
what the rules are and what it's all about. So it really is almost as much for me as for you. Maybe not quite as much, but it does have a value for me too. So I love doing it.
That's the best high value offer I've seen ever in the industry. So you're to be saluted for that, man. And yeah, he's good. He's go check out his testimonials. They're legit. Some people put up a bunch of phony testimonials. I used to be a college teacher. I can tell when people like the same person rewrites the same. Norms are all unique and they're valid and they're good. So a lot of people believe in him, myself included. And to get all that access to the guy for under 1K, unheard of. So thanks for making an outstanding offer. And I highly recommend him. He's good.
Thank you again, Kenneth. Thanks for these extravaganzas you put together for us. It's fabulous. I love the 30-minute sprint.
Yeah, me too.
Fabulous.
Yeah, it's been great though. You're always got a lifetime access to be a presenter here, and you guys take advantage of the offers from all the speakers. These are top level people. If they weren't, they wouldn't be here. And so I trust them all, and I believe in them all. I think they're really good because I've seen them. I've known most of these people at least a decade. So great job, and I'll see you another time. It's their money, your profit.com. Right. Thanks, Norm, and thanks to all of our visitors for being here. Yeah, it's trade smart. Hopefully you got at least one good idea per presenter. I know I did. A lot of next level stuff here. We don't get like amateur educators who don't know shit and they act like they know and they don't. It's like for us old timers, only actually know our way around, and we've done it and we know what works. So take advantage of the offers. Thank you for being here, and see you in the next one. Take care, and best wishes for success and peace of mind and unlimited wealth in your trades. Take care, and I'll see you later. Bye for now. That was good. And best ones ever.